So, hello everyone, welcome to this marathon session. So, before starting our marathon, let me give you a small brief about this marathon, like how we designed this entire marathon. So, first thing, the subject that we discussing is indirect taxation. When it comes to the CA students, especially CA Inter students, for them only GST portion is applicable. However, if the student is writing CMA Inter examination, then for them the customs portions are also applicable. So this entire marathon has been divided into three parts. So where in part 1, we are going to cover all these chapters. That is, we are covering supply, reverse charge mechanism, composition scheme, time of supply, value of supply, place of supply, and ITC. Apart from this, there are other many procedural chapters. Example, we have registration, returns, e-way bill, tax invoice. So all these chapters we are going to cover in a separate part called as part 2. So especially if you're writing CA Inter examinations, for you part 1 and part 2 is sufficient. There is no need to focus on part 3. However, if the student is writing CMA Inter examinations, so for those students, they need to refer all the three parts, part 1, 2 and part 3. Sir, in part 3, we are going to cover the customs and extra topics applicable only for the CMA Inter. Example, there is a chapter called as time of supply. In time of supply, there is a separate section called as section number 14 that we are going to cover in this extra topic. The same way, valuation, we are having something called as valuation rules. So those valuation rules we are going to cover in part number 3. So if you are a CA student, refer part 1 and part 2. If you are a CMA student, refer all the three parts. Apart from this, ICAI haven't released the new RTP. So whenever we receive the new RTP, I'll make a dedicated video on RTP, as well as I'll be providing an amendment lecture as well. Okay, na? So this marathon is recorded in such a way that we need to cover all the topics, every topic. However, we are going to cover in a fast-paced manner. So if at all you want any additional resources from me, please leave us a comment. We will reply and we will make sure that all the needs will be satisfied. Okay, now thank you for trusting Lakshya. Thank you. So now we are going to discuss a chapter called as supply. So before discussing the entire chapter supply, first I'll tell you like where is the origin that we received from this term called as supply. So if you remember, in our regular class we discussed something called as article number 366 of the Indian Constitution. Sir, what is article number 366 of the Indian Constitution? Sir, it explains the definition of GST, goods and services tax definition. What is the definition? If you remember, the definition is GST is a tax. It is a levied on supply of goods or services or both, except tax on alcoholic liquor for human consumption. So this is what the definition of GST given in article number 366 of the Constitution. So what the definition is saying, first thing, the GST is a tax. All we know that this is a tax that is levied. What is the meaning of levied? That is imposed. So it is imposed on what? It is imposed on not goods or services. It is imposed on supply of goods or services or both. That means to charge a tax called as GST, first I need to check whether it is a good or not. If not good, I need to check whether it is a service or not. Okay, sir, I have verified that it is a good or it is a service. Can I charge GST? No. To charge GST, it must be a supply. That is the reason we need to learn something called as what is the meaning of supply. So before further discussion about supply, let me tell you what is the meaning of goods and what is the meaning of services. So yeah, tell me everyone, what is the meaning of goods? Section 2, subsection 52 of the CGST Act says that goods means every kind of movable property. This is the first basic thing. Good means every kind of movable property. Okay, sir, every movable property is a good. But the act clearly saying that it includes something as well as it excludes something. Sir, it includes. Sir, it excludes. Sir, why it excludes something? Because every movable property is a good, but government don't want to charge GST on some kind of movable properties. So that is why we excluded. What it excludes? It excludes number one called as money, and it excludes number two called as securities. So on two things, even though they are called as movable property, we are charging GST. We are not charging GST. We are not charging GST. First thing, money. Sir, why no GST is levied on money? Because money is used to make a transaction. We are not using money as a good. Money acts as a medium of exchange. So since money is acting as a medium of exchange, we are not going to charge GST on the money. Second one, securities. Sir, in the case of securities, already a tax called as security transaction tax as per income tax has been levied. So again, we are not going to charge GST because it will be like kind of a double taxation. Okay, then we will come to includes. So why it includes? Because the act already says every kind of mobile property. So then what is the meaning of include? Include means the property is a kind of immovable property, but I want to include in the definition of goods. By default, if you observe, every kind of movable property is a good, but specifically I kept something called as includes, which includes this goods includes. Sir, why I want to include something? Because first thing, it is not a movable property. Sir, if it is not a movable property, what it becomes? It becomes a immovable property. That means there are some kind of immovable properties. On those kind of immovable properties, I want to charge GST, so I included them in the definition of the goods. Sir, what it includes? It includes growing crops, grass, or things attached to or forming part of the land which are agreed to be severed before or under contract of supply. Sir, what is the thing, sir? Number one, growing crops. Number two, grass or things which are attached to or forming part of the land, which is already attached to the land. Anything which is attached to the land is called as immovable property, but it must be what? Severed. When it must be severed? Before or under contract of supply. Sir, let's take an example. So there is 1 acre of agriculture land. Let us say we are having all these things. Let us assume all these things are sugar canes. So now today, that is on 15th April, example, we entered, let us say X entered a contract with Y. What is the contract? X is going to sell this entire 1 acre of sugarcane to Y on 30th of April. Okay, na? Sir, first tell me when the contract has been entered. The contract has been entered on 15th April. Sir, at the time of entering into the contract, this property is a movable property or immovable property. At the time of the contract, this property is a immovable property. But if you observe, at the time of execution of the contract, that is on 30 April, what is the terms of the contract? I promised him that I am going to sever this entire sugar cane. So when I severed this sugar cane, now tell me whether this entire sugar cane is movable property or immovable property. After severed, it becomes immovable property or movable property. Movable property. That means At the time of entering into the contract, the property is a immovable property. But at the time of execution of the contract, the property becomes movable. Hence, government said, anyhow, at the time of execution of the contract, it becomes movable now. So, assume today it is form part of what? Goods. That means charge GST. So, remember, most important thing, it must be severed. When it must be severed? After the contract, before or under the contract? Before or under the contract. In simple terms, at the time of execution of the contract. I hope this is clear. So next thing, actionable claims. It includes actionable claims also. Sir, by default, actionable claims are treated as movable property. That means actionable claims are already part of movable property, but for giving extra clarity, government said the goods includes actionable claims, because as per Sale of Goods Act, goods excludes actionable claims, because actionable claims that were covered under one more act called as NI Act. So hence, to give a more clarity, government kept like goods includes what? Actionable claims. So this is the definition of what? Goods as per GST. So tell me, what is the definition of goods? Goods means every kind of movable property. It excludes something and it includes something. What it excludes? Money and securities. What it includes? Actionable claims, growing crops, grass or things attached to or forming part of the land, which are agreed to be severed before or under contract of supply. So I hope the definition of goods is clear. Now, section 2102. Sir, it talks about the definition of services. Sir, most easiest definition, the definition of services. Sir, what is the definition of services? Services means anything other than goods. That means it includes the broader picture. If that is not a good, automatically it becomes a service. But here also remember two things: excludes, includes. Excludes money, excludes securities, same as earlier, and it includes activities in relation to change of currency. What we wrote? Activities in relation to change of currency from one form to another form, for which a separate consideration is charged. That means, let us say I have 5,000 rupees with a denomination of 500 multiplied by 10 notes I have. I went to a bank. I requested that, sir, take this entire 5,000, give me in the denomination of 100. That means I need a 100 into 15 notes. Can I say this is called as change of currency from one form to another form? Obviously, yes. Sir, but for this, no, what happens? This banker charged 100 rupees commission. What is banker charged? 100 rupees commission. So this is called as separate consideration is charged. So whenever separate consideration is charged, then on this transaction, on this 100 rupees, GST will be levied because it is called as service. I hope this is clear. And more important, remember, securities on transaction with relation to securities, no GST will be levied. However, there are some people called as stock market brokers. Angel One, Grow, Zerodha, all these people are brokers. So these brokers, from time to time, they will charge something called as brokerage charges. Sir, on those brokerage charges, GST will be levied because securities means only buying and selling of shares. For that, if the brokerage is going to charge any brokerage fee, then on that brokerage fee, definitely GST will be levied. No exemption will be given. I hope this is clear. And we wrote goods services excludes money. Money means which money? So the currency which is presently accepted in the country. So this is the definition of goods and services. So I hope at this point of time you people are having very good clarity on the definition of goods as well as definition of services. So what are the section numbers in the case of goods? It will be 2 subsection 52. The services case may it will be 2 subsection 102. So these sections are of which act? All the sections are from the CGST Act except the chapter place of supply. In the case of place of supply, we are focusing on IGST Act. So I hope goods and services are clear once again. Now we will discuss the most important thing, supply. Sir, supply. What is the section number, sir? Section number 7 of the CGST Act, we are going to discuss a supply. Sir, if it is a supply, then we are going to think further, like whether the GST is going to be charged or not, whether exemption is given or not, something. Any procedure under GST will be applied only when it is a supply. By chance, if any transaction is not a supply, the matter over, no GST will be levied. Simple. So to levy GST, the most important thing is what? It must be supply. After it is a supply, we need to check what? It is a supply of good, it is a supply of service. Okay, na? So now we are going to discuss section number 7. Sir, in this section number 7, our primary focus is on 7.1. This particular 7.1 has been divided into 7.1a, 7.1b, 7.1c and 7.1AA. So total 4 sections we are going to discuss. 7.1a, then 7.1b, then 7.1c, then 7.1AA. Okay, no? Section number 7.1a. So to say any activity or transaction is a supply, it must satisfy a kind of test called as ABC test. For ease of understanding, we created this test. This is called as ABC. So when any transaction or activity qualifies A, B and C, all the 3 things together, then the transaction is called as supply as per 7.1a. Any of the thing fails, then it is not a supply. Sir, first what is A? A means all forms of supply of goods or services or both. So A means what? All forms. Sir, what is the meaning of all forms? A total of 8 items given to us: sale, transfer, barter, exchange, license, lease, rental, disposal. Sir, any of these things out of 8, if anything happens, then that is called as what? Condition number A has been satisfied. Suppose I sold one pen to my customer. Can you say this is called as a sale? So A test is satisfied. Once A test is satisfied, then think about B. Sir, B stands for business. I sold a pen. This is a sale. Yes, but I need to check whether this is in the course or furtherance of business or not. If it is my business is selling of pens, then condition number B is satisfied. So what is condition number A? All forms. What is condition number B? It must be in the course of furtherance of business. Then A plus B satisfies, then go to C. What is C says? So C says consideration. That means I sold a pen, okay, but I need to charge money from the customer, right? Let us say I'm charging 10 rupees from the customer, then that is called as what? Consideration. Hence all the 3 things are satisfied. I can say this transaction is a supply. Yes. So what are the conditions? All forms, It includes 8 forms: sale, transfer, barter, exchange, license, lease, rental, disposal. And this should be made in the course or furtherance of business, and it should be made for a consideration. So when all these three conditions are satisfied, then I can say that section number 71A has been satisfied. The particular transaction is a supply. Clear? Yes. So then we have some clarifications. Donations received by a charitable institution from individual donors without quid pro quo, something for something. Sir, I'll give an example. Mr. X donated 1 lakh rupees to a charitable institution. Okay, no? Sir, in return, this charitable institution made advertisement about X company. Okay, now this is a kind of case given to us. So X is a person who donated, whereas charitable institution has received the donation, and this charitable institution made a kind of advertisement with respect to X company because they received the donation. So remember one thing I want to say: under GST or any indirect taxes, there are two parties involved. One is called as a supplier, the other person is called as recipient. Identification of supplier and recipient is most important in indirect taxes. So the person who pays the money is called as recipient. The person who is paying the consideration is called as recipient. The person who is received the consideration and providing the service is called as supplier. In our example, tell me who is the supplier and who is a recipient. Sir, X donated the money. So X gave the money. So X is called as recipient. Any person who pays the consideration is called as recipient. So X is called as recipient, whereas charitable institution is called as a supplier. So you need to check that for this 1 lakh rupees, whether the charitable institution is providing anything or not. Yes, that means there is a supply because charitable institution made the advertisement. Sir, what if charitable institution just took the money? There is no advertisement. Let us say with this 1 lakhs, charitable institution purchased a water purifier. On the water purifier, they mentioned that thanks Mr. X as a gratitude, not as advertisement. They just mentioned as a gratitude. Sir, can I say whether this is a supply? No, it is a pure water donation motive. So there is nothing received by X. X gave 1 lakh, but in return X received nothing. So this is not a supply. That means you need to check that the person is donating, correct, the opposite party whether they are providing any service or not. In the earlier example, the charitable institution made an advertisement. That means the charitable institution gave a service to X, and in return X paid 1 lakh to the charitable institution. So this is a supply because ABC has been satisfied. But in this example, nothing. The charitable institution haven't provided anything. The charitable institution just mentioned that what? Thank you. That is a kind of gratitude. Hence, it is not a supply. I hope this clarification is clear to you. So this is 7.1a. Now, our focus is on 7.1b. Okay, so since this is a revision class, I'm not going much details about 7.1b. Actually, there is very good logic with respect to why 7.1b has been introduced. But for the time being, I'll tell you in a simple way. So there is one person in India. Okay, now there is one person in US. The person in US is called as X. The person in India is called as Y. So this Y purchased some interior service. Y purchased what? Some interior service from X. Okay, now, sir, can I call from Y point of view, it is import of service? Yes or no? Yes. So think from the government point of view. Generally, all the indirect taxes will be collected from the seller, because government cannot go to the each and buyer and ask GST. So what government is said, Babu buyer, anyhow you are selling the goods, so while you are selling you will collect your money, along with your money collect GST also. So that means every indirect taxes works like the seller has to collect money from the buyer and give to the government. Sir, but this is a kind of special case. Why this is a kind of special case? Because the seller is located in Indiana, outside Indiana. The seller is located outside India. If the seller is located outside India, think from Indian government point of view, whether the government can collect GST from X or cannot collect GST from X. Government cannot collect GST from X. But government wants GST. So that is why the government shifted the provisions from X to Y. Normally X has to pay the GST because X is the seller. But in the given case, Y has to pay the GST because Y is the buyer and Y is in India. X is outside India. So for government, it is impossible to collect the GST from person who is outside India. Hence, government is saying that, Babu, importer, you are located in India, so you please pay the GST. So that is why 71B has been introduced. So I'll tell you what is 71B. Sir, what is 71B? So 71B talks about only one transaction, import of service. Okay, na? Import of service plus, it is most important for consideration. We have ABC test, no? B for business, C for consideration. Consideration is important. But government is saying, so this import of service may or may not be for business. So what is the transaction here? Import of service by a person for consideration, whether or not in the course or furtherance of business. That means I am in India, I am taking some service from a person in US. This service what I am taking, that may be for my business purpose or that may be for my personal purpose, that will be treated as supply. As per 71A, only for the business, it will be treated as supply, but as per 71B, it may be for the purpose of business or it may be for the purpose of personal. If there is a consideration, that is enough, that is a supply. That means this business is irrelevant. If there is a consideration, the matter is over, that is a supply as per 71B. Clear? 71A, both the conditions, business and consideration. 71B, business is not required, consideration is enough. Okay, now. So next, 71C. Sir, here we are talking about C. Earlier we talked about B, business. Here we are talking about C. C means what? Consideration. So government is saying that, sir, I'll give you something called as schedule number 1. What is this? Schedule number 1. In this schedule number 1, government said 4 transactions. How many transactions? 4 transactions. So these 4 transactions will be treated as supply even if there is no consideration, but it should be made in course or furtherance of business. What is schedule 1? In the schedule 1, 4 transactions has been specified. These 4 transactions will be treated as supply. Even there is consideration, even there is no consideration, but it must be in the course or furtherance of business. Okay, now, so here we are focusing that these transactions, no consideration is involved, but government wants to charge the GST. Hence, these four things brought under the supply as per 7(1)(c). Sir, what are these four transactions? Permanent transfer or disposal of business asset on which ITC is claimed. What is the first one? Permanent transfer or disposal of business asset on which ITC has been claimed. Sir, example, I have a shop where I am into dealing of air conditioners. So my business is buying and selling of air conditioners. Let us say I purchased 100 air conditioners and I paid 100 lakhs GST. Now tell me, since I am in the business of air conditioners, any tax which is paid on my purchase will be acting as my ITC. Government is saying that, Babu Rajesh, you are buying ACs and you are selling ACs. So you are not consuming the ACs for your own benefit. You are just into trading of ACs. So any tax you paid on this 100 ACs, you are eligible to claim ITC. So what is the amount of ITC? 100 lakhs. So what I did, I claimed entire 100 lakhs as ITC. Now what happens is, sir, out of these 100 ACs, 4 air conditioners I transferred to my home. In my home, I have a requirement of air conditioners. So rather than purchasing with some outside vendor, what I did, anyhow, I have a stock of 100. So out of this 100, 4 ACs I transferred to my home. Sir, if you observe here there is a transaction. But since it is transaction made with consideration or without consideration, to my home kada, no consideration is charged. But if you observe what I did, I claimed ITC. No, logically you tell me whether I am eligible to claim ITC on these 4 ACs or not. No, because government gave ITC just because I am selling the ACs. I am not consuming the ACs. But what I did, I transferred 4 ACs to my house property. So on these 4 ACs, I am eligible to claim ITC. I am not eligible to claim ITC. Not eligible. But already what I did, I claimed ITC. No. So what government is saying, Rajesh, when you transfer these 4 ACs to your home, even though there is no consideration, even though there is what? No consideration, but you claimed ITC on those 4 ACs now. So treat this transaction as a supply. When the transaction will be treated as supply, what happens? GST will be levied. Okay, now. So this is point number 1. What is point number 1? Permanent transfer or disposal of business asset on which you claimed what? ITC. So the second one, transaction between related persons or distinct persons. Sir, first I want to tell you like who are the distinct persons. Sir, under GST registration, there is some chapter called as registration. So every person who has taken registration under GST is eligible to collect a GST from the customers. Now what happens is, the registration what we are taking now, it is based on PAN. Okay, now it is based on PAN, and I have multiple place of business. Then I need to take for every state separate registration is required. AP, Telangana, I have 2 branches, branch 1 and branch 2. So for branch 1, since it is in Andhra Pradesh, I need to take separate registration. For branch 2, since it is in Telangana, another state, I need to take a separate registration. Sir, but for these 2 separate registrations, PAN is compulsory. I am giving a same PAN card because PAN is accepted all over India. So if you observe here, one PAN card, but multiple registrations. On the same PAN card, since I am taking multiple registrations, these 2 branches are called as distinct persons. These two branches are called as what? Distinct persons. Now the provision says that if AP branch transfers any stock to Telangana branch, or Telangana branch transfers any stock to AP branch, even though there is no consideration, these transactions will be treated as deemed supply as per schedule number 1. What is a transaction? Any transaction between distinct persons with consideration or without consideration. Without consideration, still treated as what? Supply. Next, in related persons, the definition of a family is most important. Sir, what is the definition of the family? Sir, family is having very simple definition under GST. It includes the person, his spouse, his children. First thing, person, spouse, children will be called as what? Family. Even though this children and spouse may or may not be dependent. But this person, parents, grandparents, brother or sister, only for this person, not spouse, not children. The person's parents, the person's grandparents, the person's brother, the person's sister, these people will be treated as family only when they are dependent. Okay, now, so what is the definition of the family? Person, spouse, children, even though they are dependent or not. And what is the extension? Parents, grandparents, brother, sister of the person only when they are dependent. This is the most important thing with respect to what? The family. Next, sir, an employer and employee will be treated as related persons. So, who is an employer and employee? Employee is a person who is working under contractual obligation with the employer. So, what is a contractual obligation? There is agreement between an employer and employee. The agreement states that the employee has to perform some specific task. On those tasks, the employer is obligated to pay a monthly salary. So, this relation is called as what? Employer-employee relation. Sir, when there is an employer-employee relation, any services provided by employer to employee without consideration will be treated as supply. Suppose the employer gave a gift to employee. The value of gift is 1 lakh. Sir, whether on this 1 lakh, this is a kind of good transferred by employer to employee. Sir, in return, whether the employer got any consideration? No. The employee have paid nothing, but the employer gave what? 1 lakh worth of watch. So this is with the consideration, this is without consideration, without consideration. Even though there is no consideration, schedule number 1 says this transaction will be treated as supply. However, remember one important point. The value of the gift is up to 50,000, then it will not be treated as supply. That means the same employer gave a watch as a gift, not worth rupees 1 lakh, worth rupees 40. So even though this is a gift, but since the value is less than 50,000, this is not treated as a supply. That means any gift given by employer to employee is a supply, except value up to 50,000. Okay, now third one, supply of goods by principal to agent or vice versa. Sir, example, principal gave some goods to the agent. Okay, now agent, let us say principal gave 100 goods to agent. Out of these 100, the agent sold 10 goods to the customer. Sir, out of 100, 10 goods have been transferred now. Who is the owner of these 10 goods? Can I say principal? but principal transfer the goods to agent so that agent can sell directly to the customer. But the real owner for this 10 goods is also principal. Now tell me, while giving invoice by the agent, on the invoice, agent has to write whose name? Agent name or principal name? Obviously, sir, the owner of the goods is principal, so the name should be also in the name of the principal, right? But no, the agent gave his name. Sir, how the agent will give his name? Agent has no goods, agent has no purchases, principal has not sold. Then how the agent will give his name? That is why if the agent is giving invoice in his own name, the government is saying the transaction between principal and agent will be treated as deemed supply. So when it will be deemed supply, the agent sold the goods, while the sale, the agent gave on his own name the invoice. Automatically, the transaction between principal and agent will be treated as deemed supply. I hope this is clear. Sir, if the agent is giving in the name of principal, then the transaction between principal and the agent is not a supply, because anyhow the transaction has been made directly from the principal to the customer. Okay, now last one, import of service. Sir, remember 7(1)(b) we discussed import of service. 7(1)(c) we are discussing import of service, but that is a general thing. Here, import of service from related persons or establishment outside India. Their import of service from any person. Here, import of service from related persons or establishment outside India for business purpose without consideration. Let us assume Mr. X is in India. X has one brother Y, okay na, in US. Sir, first tell me when X and Y will become relative. Only when Y is a dependent. Yes or no? Because person, spouse, children, whether or not they are related, parents, grandparents, brothers, sister will be treated as family only when they are dependent. For the time being, let us assume Y is dependent on X. That means both are related parties. So first condition satisfied. Import of service from related persons. So this Y gave some interior services. What? Interior services. So the value of these interior services is 5 lakh rupees. Okay, now how much is the value? 5 lakh rupees. So since this transaction is between related persons, Y is not going to charge any money from the X. So what is the consideration? 0. Sir, when there is no consideration, 7(1)(c) will apply. When there is consideration, when there is no consideration. When there is no consideration, 7(1)(c) will apply. In the given case, Y is not charging even a single rupee from X. That means there is no consideration and it is import of service from the related persons. Two things is satisfied. Next, so to say this is supply, X must take the interior services for business purpose. Let us say X is going to open a new office. For the new office, X took interior services from Y without consideration. Then this is a supply. Suppose in the same case, if X took this interior service for personal purpose, even though this is a transaction between related parties, since no consideration is involved and there is no business purpose, it is not a supply. That means, come on. 7(1)(c) when it will apply? First one, import of service from any person, from related persons or establishment outside India. import or service from related persons or establishment outside India. Number one. Number two, 7(1)(c) kada, with the consideration, without consideration, without consideration. Third one, in the course or furtherance of business. When these three things are satisfied, then it is supply as per 7(1)(c). Sir, what about 7(1)(b)? Import or service from any person with the consideration whether or not in the course or furtherance of business. I'll give you a small chart. Import of service. For consideration, without consideration. Sir, if there is consideration, automatically it is what? 7(1)(b). Consideration whether or not in course or furtherance of business, it is a supply. If it is without consideration, if it is without consideration, check related persons or establishment outside India. Yes, no. No means not a supply. If it is yes, plus in course or furtherance of business, then it is supply. If it is not in course or furtherance of business, it is not a supply. So, import of service without consideration, when it will be supplied? Only when it is made by related persons or establishment outside India, plus it should be in the course or furtherance of business. That means this is the most important thing. Okay, so this is what 7(1)(c). Next, there is something called as 7(1)(a). So this provision has been introduced after the matter went to Supreme Court and the judgment court, and this is a retrospective amendment. So for ease of thing, I'll tell you. Services provided by any person other than individual to its members. Suppose Resident Welfare Association. There is one gated community. They created a welfare association. Sir, every month what this welfare association will do? They will collect maintenance charges from their members. Let us assume every month they are charging 10,000 from their members. Sir, why these maintenance charges have been collected? Because this association will maintain the entire community. Let us assume they'll provide a common electricity, they'll provide a cleaning services, they'll maintain the staff, security guards, all these things. No, for that they are collecting this maintenance charges. So since this is Resident Welfare Association, they are giving services. So services provided by any person other than individual to its members. And remember, we are charging consideration. We are not charging consideration. We are charging consideration. Hence, this 10,000 will be treated as a supply. Okay, now, however, exemption has been given. The maintenance charges, which is up to 7,500, no GST will be levied. But our focus is on whether that is supply or not. Since they are collecting 10,000 and providing a maintenance services, it is a transaction between association and its members. Hence, this will be treated as what? Supply, as per which section? 7(1)(a). So we are done with 7(1)(a), 7(1)(b), 7(1)(c) and 7(1)(a). So all these four sections talks about whether a transaction is a supply or not. If it is a supply, then we are going to discuss the further provisions. If it is not a supply, the matter is closed. No levy of GST will take place. Okay, now I hope that is clear. Okay, sir, after completing 7(1)(a), 7(1)(a), 7(1)(b and 7(1)(c), the next section we have is section 7(1)(A). Sir, what is this 7(1)(A)? Sir, in earlier things, that is 71A, B, C, and AA, we discussed any activity or transaction that is a supply or not. But if you remember the starting of the revision that we discussed, that there is something called as article number 366, the definition of the GST. Sir, what is the definition of the GST? GST is a tax that is levied on supplier, that is levied on supply of goods or services or both. That is levied on supply of goods or services or both. So it is very important for me to identify whether this supply is a supply of good or this supply is a supply of service. So that details has been given under schedule number 2. Suppose example, transfer of ownership. Sir, if there is a transfer of ownership, it is called as a supply of good or supply of service. Supply of good, because ownership has been transferred. If there is a transfer of right to use, the ownership is with me, but I gave my car on rent. So this is called as what? Service. That way we classified the transactions into supply of good or supply of service. Have a single reading, that is enough. Most of the things you will understand. So most important, section number 7.2. So this is 7.2 is also called as negative list. So any item which is given under something called as a schedule number 3. What am I? Schedule number 3. On these transactions, no GST will be charged because all these transactions will be treated as neither goods nor services. If anything or any transaction that is not a good and that is not a service, if it is not a good and not a service, can we charge GST? No. That is why 7.2 is called as negative list. All the transactions are said in schedule number 3. Sir, first transaction, any service provided by employee to the employer in the course or in relation to his employment. Sir, example, I'm an employee working in a company called as X. On monthly basis, what happens? I will receive something called salary from the company. Sir, already on this salary, I am paying income tax. The highest slab rate of income tax is approx 30%. That means out of 100 rupees I am earning, I am paying 30 rupees as direct tax. And again, on this thing, if GST is levied, the residual money with me will becomes more and more decreases. That means my spendings will increase, my spendings will decrease. That is why government said, like, Babu, don't pay any GST on the salary. That means any services provided by me as an employee to the employer will not be subject to the GST. Sir, most important thing, the service should be provided by employee to the employer. Suppose there is a director called as independent director. So remember, independent director as per Companies Act, he can never be an employee. That means independent director is giving service to a company. On this service, the company is paying 1 lakh. On this 1 lakh, GST will be levied because it is clearly said that employee to the employer, but independent director is not an employee, hence GST will be levied. So then we have a director working in dual capacity. So there is one person, he is working as employee and he is working as director. This is called as dual capacity. On employee portion, no GST. On director portion, GST will be levied. So example, total of 10 lakhs has been paid by the company. Now we need to identify, like, sir, whether on this 10 lakhs GST will apply or will not apply. So what government is saying, sir, if he is an employee, what is the applicable TDS as per income tax? 192. If he is a director, what is the applicable TDS section? 194J. So out of 10 lakhs under section 192, for 6 lakhs TDS has been deducted. For 4 lakhs 194J TDS has been deducted. That means this is 6 lakhs no GST, this 4 lakhs GST will be levied. So on this 6 lakhs no GST will be levied and on this 4 lakhs GST will be levied. This is called as director working in dual capacity. Next we have something called as sitting fee. The directors are coming to the board meetings and they are attending to the board meetings. Since they are attending to the board meetings, the company will pay something called a sitting fee. Sitting fee is exclusively paid to the directors, hence on the sitting fee, GST will be levied. Perk visits. So perk visits are also treated as salary, hence no GST will be levied. Non-compete fee. So non-compete fee is something like, example, we have an employer, Mr. X. This employer, he wanted to leave the company. At the time of completing the contract, we entered into contract with employee saying that, Babu, after resigning this company, I don't want you to join any of the companies which are located in Hyderabad. So the employee said like, sir, okay, I'll do the same, but I will be charging 10 lakh from you. So this is called as non-compete fee. So non-compete fee, that is something paid to the employee after the end of the contract. After the end of the contract, no, on that GST will be levied. Next, any services provided by any court or tribunals which are established under any law, no GST will be levied. And any services provided by the government, no GST will be levied. Who are the people? These services are provided by the MP, MLA, Panchayat, municipality, local authorities. All these people are called as what? Public representatives. So the services provided by the public representatives, no GST will be levied. Next, duty performed by any person who holds any position in pursuance of the provisions of the Constitution in that capacity. For example, President of India, Speaker, Chief Election Commissioner. So these people hold that respectable position because Constitution said that those positions. Suppose example, all the elections should be taken care by Chief Election Commissioner. So Chief Election Commissioner is a position that is mandated by the Constitution. So hence on those services provided by these people, no GST will be levied. Next, duties performed by chairperson, member, director of a body established by the central or state government or local authority. So for a specific purpose, these central governments and state governments will create a separate bodies. So the people who are holding any position in those bodies, whatever the service provided by those people, no GST will be levied. Next, anything which is related to the death. So service of funeral, burial, transportation of deceased person, crematorium, mortuary, no GST will be levied. Next, sale of land, no GST, because land is a immovable property, so no GST will be levied. Sir, sale of building. Sir, when it comes to sale of building, remember two things. First occupation, completion certificate. Take whichever is earlier. First occupation, that will be given in the question. Completion certificate, that will be given in the question. Take whichever is earlier. Sir, check when you received the consideration in the case of building. Sir, if you received any consideration before this earlier date, let us say 1 crore is the building value, 1 rupee is I received before, and entire balance amount I received after. No matter what, since you received 1 rupee before this date, on 1 crore GST will be levied in the case of building. Sir, what if I received entire 1 crore after? No GST will be levied. So when GST will be levied? First occupation, completion certificate, whichever is earlier. Consideration received before, GST will be levied on full amount. Consideration, full consideration received after, no GST will be levied. Next, actionable claims. Sir, the main intention of the government is not to charge GST on all the actionable claims. Government want to charge GST only on the specified actionable claims. They are 6. We call them as SAC, specified actionable claims. Sir, what are the specified actionable claims? Lottery, betting, gambling, horse racing, casino, online money gaming. These 6 items are called as specified actionable claims: lottery, betting, gambling, horse racing, casino, online money gaming. Next, we have other. Sir, on these items, GST will apply. On these other items, no GST because they are covered under schedule number 3. So on actionable claims, two categories: specified actionable claims, other actionable claims. In the case of other actionable claims, no GST will be levied. In the case of specified actionable claims, there are 6 items. On them GST will be levied, and in this case schedule 3 will not apply. Here schedule 3 will apply, hence no GST. So these are the concept of actionable claims. Then we have supply of goods from place in non-taxable territory to another place in the non-taxable territory without such goods entering into India. Suppose goods are moving from one place outside India to another place outside India. On these transactions, even though the person is in India, no GST will be levied. Next, supply of goods to any person before clearance for home consumption. So generally the goods become part of India only after clearance of home consumption. So any supply before clearance of home consumption, no GST will be levied. So these are the amendments. Apportionment of co-insurance premium by the lead insurer to the co-insurer. So remember the concept. So there is one company called as Reliance Industries Limited. So this Reliance Industries Limited want to take stock insurance. They wanted to take insurance for their stock. So Reliance went to LIC asking that LIC, I have a 1000 crores worth stock. I want a insurance for this 1000 crores stock. So LIC said, okay, I will give you insurance, but you need to pay me the premium of 1 crore. Reliance accepted. Reliance said, okay, I will pay you 1 crore, but you need to give me insurance worth how much? 1000 crores. Okay. So now what happens to LIC? LIC felt like 1000 crores is a huge amount. So what LIC did? LIC went to Bajaj. LIC went to Bajaj and said, Bajaj, I got one contract from the Reliance. Reliance want insurance for their 1000 crores stock. But I am not in a position to take entire risk because 1000 crores is a huge risk. So LIC said that I am ready to take only 50%. Are you okay to take the extra 50%? Bajaj Allianz said, okay, I am willing to take extra 50% risk. So now Reliance paid 1 crore. To whom? To LIC. Sir, while making the payment of 1 crore, LIC will collect only premium. Premium plus GST. LIC is collecting 1 crore plus 18 lakhs GST. After LIC collecting 1 crore 18 lakhs, what LIC will do? LIC will keep 1 crore and this 18 lakhs will be given to the government. And then can I say on this transaction, the government collected entire GST? Yes, because the LIC deposited 18 lakh rupees. Now, this 1 lakh, 50% will be given to Bajaj because Bajaj took 50% risk. That means what is the money given by LIC to Bajaj? 50 lakhs. Sir, if you observe, on this 50 lakhs, LIC already paid GST to the government because LIC collected 1 crore. On this entire 1 crore, 18 lakhs already LIC paid GST. On that amount, on that 1 crore, LIC is distributing 50% to Bajaj. That means this 1 crore is already subject to GST. So this 1 crore is already subject to GST and LIC paid GST on 1 crore. Hence, on this 15 lakhs, no GST will be levied. Suppose LIC collected 18 lakhs, but LIC paid GST only on the 50 lakhs. That is not 18 lakhs, only 9 lakhs. If LIC is paying GST only on 9 lakhs, but government wants GST of 18 lakhs, then this transaction will be treated as supply. That means 9 lakhs GST will be levied. So in simple terms, if the lead insurer is paying GST on full premium, then the transaction between the lead insurer and co-insurer is not a supply. Clear? Yes. Tarvata. services by insurer to the reinsurer. So this is also similar concept, but earlier two parties simultaneously giving insurance to one company, but here it is a reinsurance. That means taking an insurance on insurance. Same example, Reliance took insurance worth 1 crore with LIC. Now what LIC did? LIC not entered into agreement with Bajaj. Rather than LIC, what it did is it took reinsurance with Bajaj. And already Reliance took insurance with LIC. On the same insurance, LIC is taking insurance with Bajaj. This is something called as taking insurance on insurance. So when a party is taking insurance on insurance, that is called as reinsurance. Okay, now so the government is saying, since here there are two transactions, two supplies, two different transactions and two different supplies, hence a GST is levied on each independent case. That means on 1 crore GST will be levied, on 50 lakhs GST will be levied. But remember, the concept is not that. Sir, here LIC took reinsurance with Bajaj, but whether LIC is actual customer? No, Reliance is the actual customer. That means all the efforts were taken by the LIC to grab the client. LIC is the one who grabbed the client. But Bajaj is getting the benefit of 50% reinsurance. That means in insurance, the agents will play an important role. That means in the given case, can I say LIC acted as agent to Bajaj? Obviously yes sir, because LIC gave 50 lakhs worth business to the Bajaj. So in return, LIC is expecting a commission because LIC acted as a agent. LIC took reinsurance not for LIC but for the purpose of Reliance. So LIC went to Bajaj and asked that, Bajaj, I gave you one client kada. So please give me a commission of rupees 5 lakhs. So Bajaj said okay. Now think from this point of view, LIC paid 50 lakhs to Bajaj and again Bajaj keeping 45 lakhs with Bajaj and paying 5 to the LIC. Now the question is whether the 5 lakhs commission paid by Bajaj to LIC, GST will be levied or will not be levied. The concept is, if this 50 lakhs is subject to the GST, that means entire transaction. What is the entire transaction? 50 lakhs kada. If this entire 50 lakhs is subject to the GST, then this 5 lakh commission, no GST will be levied. That means LIC is paying to Bajaj. Bajaj is collecting 50 lakhs. If Bajaj is paying GST on 50 lakhs to the government, what is GST on 50 lakhs? 18% kada, 9 lakhs. If Bajaj deposits 9 lakhs to the government, that means can I say this 50 lakhs GST has been paid? Hence, this 5 lakhs, no GST will be levied. That means to charge GST on 5 lakhs commission depends upon the Bajaj payment of GST. If Bajaj is paying GST on full amount, then on the commission, no GST will be levied. So these are the two things. One is reinsurance, the other one is co-insurance. In the case of co-insurance, there is only one supply. In the case of reinsurance, there are two supplies. Next, so sale of alcohol for human consumption, no GST will be levied because that is covered under article number 366. However, government by way of notification said that services by way of grant of alcoholic liquor license, here they are not selling the alcohol, here they are selling alcoholic liquor license. By whom? By the state government. Then also then no GST will be levied. Next, interstate movement of various modes of conveyance. For example, AP, Telangana. Sir, we are operating a bus. So this bus, what it will do? It will take passengers from AP and drop the passengers in Telangana, and again it will take passengers from Telangana and drop the passengers to AP. That means, can I say this conveyance is moving from one place to another? Sir, can I say the AP branch and Telangana branch are related persons? Because I have one office in AP, I have one office in Telangana. These people are called as distinct persons. Any transaction between distinct persons, even though there is no consideration, GST will be levied. That means if AP branch sent bus from AP to Telangana, on the bus, whether GST is levied, logically, as per schedule number 1, GST should be levied. Why GST should be levied? Transaction between distinct persons without consideration made in the course or furtherance of business, it will be treated as a supply. But please tell me whether in this case, should I treat this bus as a supply or not? The bus is moving from one place to another. Sir, that is a quite common in business. There is a movement of vehicle, there is a movement of bus. Sir, on the passengers, yes, on the ticket price, GST will be levied. But my question is not on the ticket price. My question is on the bus movement. Whether the movement of bus, GST should be charged or GST should not be charged. So GST should not be charged because here the primary purpose is taking passengers from AP and dropping the passengers to Telangana, and taking passengers in Telangana, dropping the passengers to the Andhra Pradesh. So here on the ticket GST will be levied, but on the movement of the vehicle no GST will be levied. That is not a supply, clarified by way of a circular. Okay na? So this vouchers concept we will discuss in time of supply. So this is as per section number 7. Then we have a section number 8. So section number 8, this is a simple section. It divides a supply into two types. One is called as a composite supply, the other thing is called as a mixed supply. Sir, let's take a simple thing. Sir, two or more supplies that are naturally bundled. Suppose example, you went to a suppose you went to a Bhadrachalam cafe. There is one particular hotel in Telangana, Hyderabad, that is called as the Bhadrachalam cafe. You went to that particular hotel and you ordered one dosa. So you got dosa plus chutney. They charged 60 rupees. Okay now? So there is one special combination. Let us assume there is one special combination called as dosa plus buttermilk. These are the two combinations we have. So you tell me which combination is a ordinary course of business, which combination is a artificially bundled. Can I say dosa plus chutney is a naturally bundled? In the ordinary course of business, every person will sell dosa along with chutney. So here there are two supplies. These two supplies are bundled and they are sold at a single price. But you need to remember, this bundle is an artificial bundle or is a natural bundle. It is a natural bundle, hence it is called as composite supply. So what is the meaning of composite supply? Two or more taxable supplies that are naturally bundled. So now tell me, out of these two, what is a principal supply? Dosa. So if dosa we are going to charge 18% GST, then automatically on chutney also 18% GST will be levied, because two supplies that are naturally bundled. In this naturally bundled, one supply is a principal supply. Principal supply GST rate will apply to the entire supply. Sir, then we have one more thing called as mixed supply. What is mixed supply? Two or more supplies, dosa and buttermilk, they are artificially bundled, they are naturally bundled, they are artificially bundled. They are two different things. We created a bundle. So these two things are artificially bundled, whether they are in the ordinary course of business, not in the ordinary course of business. This is not in the ordinary course of business, but we created that bundle. Hence this supply is called as a mixed supply. In that case, how the GST will apply? The GST will apply is, example, dosa 5% GST, buttermilk 18% GST. Highest rate will apply in the bundle. In the bundle, what is the highest rate? 18%. So hence 18% will apply. This is the concept of composite supply and mixed supply. So it depends upon the bundle. The bundle is a artificial, the bundle is a natural. Natural case में Principal supply GST rate will apply, artificial bundle highest rate GST will apply. So this is the chapter number 2, supply. Okay na. So next we will discuss the next chapter, that is levy. Okay ma, done. So now we are going to start with a chapter called as levy. So sir, in this levy we are going to discuss a section called as section number 9. This section number 9 has been divided into 5 subsections: 9.1, 9.2, 9.3, 9.4 and 9.5. So what is the first section we have? Section number 9 subsection 1. So basically section number 9 subsection 1 talks about the definition of CGST Act. All we know, as per article number 366, what is the definition of GST? GST is a tax that is levied on supply of goods or services or both, except a tax on alcoholic liquor for human consumption. But when it comes to 9.1, here we are not talking about the definition of GST, rather we are focusing on the definition of CGST. So the definition says like, CGST is a tax, not a GST. Here the focus is on CGST. So CGST is a tax that is levied on intrastate supply of goods or services or both, except except a tax on alcoholic liquor for human consumption. And 2 more points have been included. They are called as extra neutral alcohol and rectified spirits. When these two are used in the manufacturing of alcohol, then on these two things also GST will not apply. So GST will not apply on 3 cases. Number 1, on the case of alcohol. Second one, ENA, extra neutral alcohol, and rectified spirits, when these two things are used for manufacturing of alcohol. That means when these two things use it for manufacturing of other than alcohol, then GST will be levied. So this is about what? 9.1. Whereas 9.2 talks about, as per our classroom discussion, HP man. Sir, what is HP man? These are called as non-taxable goods. Right now, no GST has been levied on these goods, but GST will be applicable on these goods when the date notified by the government on the recommendations of the council. So what is HP man? High speed diesel, petroleum crude, motor spirit, aviation turbine fuel and natural gas. So right now on this no GST will be levied. That is why these things are called as non-taxable goods. So on total of 8 items, no GST will be levied currently. They are called as alcohol, ENA, rectified spirits as well as HP man. All these 8 items are called as non-taxable goods. That is basically with respect to 9 subsection 2. The most important for this chapter is 9 subsection 3. Sir, what is 9 subsection 3? It talks about RCM, reverse charge mechanism. So I'll give you a briefing about reverse charge mechanism. Normally, every transaction involves 2 parties, supplier and recipient. Normally what happens? The recipient will pay money to the supplier. Example, 100 is the value of goods, 18 is the GST. So recipient is paying 118 rupees to the supplier. Now what supplier will do? He will keep his 100 rupees with him and he will deposit 18 rupees to the government. That means, can I say, it is the responsibility of the supplier to collect GST from the recipient and deposit to the government? Yes. This mechanism is called as forward charge mechanism. So in the case of forward charge mechanism, the supplier will collect GST from the recipient and will deposit tax to the government. Whereas in the case of RCM, the same transaction we will take, there is a supplier and there is a recipient. Now recipient will pay only 100 rupees, that is value. Recipient will not pay GST to the supplier, rather recipient directly pays GST to the government. That means the burden has been shifted from the supplier to the recipient. So when the recipient is directly paying tax to the government, we call it as reverse charge mechanism. Now the question comes, sir, whether RCM will apply in all the goods or services? No. So only the items that are said in 9.3 and items in 9.4 RCM will apply. Rest of all the other cases FCM will apply. So that is why focusing on this chapter is most important, because here whatever the transactions that are specified, only on those transactions reverse charge mechanism will apply. What is reverse charge mechanism? It is a responsibility of the recipient has to pay GST directly to the government. So first thing, RCM goods. So we will discuss from our charts. So the first thing, the supplier is the agriculturist and the recipient is the registered person. So when agriculturist is supplying the following goods, then RCM will apply. Sir, what are the goods that are notified here? Cashew nuts, they are not shelled or peeled. BD wrapper leaves, which are also called as tendu leaves, and we have raw cotton and we have tobacco leaves. When these four goods supplied by an agriculturist to a registered person, it is a responsibility of the registered person to pay GST directly to the government. Hence here RCM will apply. Second case, the supplier is the government, that is central government, state government, union territory or local authority, and the recipient is a registered person. Sir, anyhow the recipient already had a registration. That is why the government is saying, Babu recipient, you pay directly tax to the GST department. Sir, what are the goods here? Used vehicle, seized goods, old and used goods, waste and scrap. If these are the things that is supplied by the government and the recipient is the registered person, then the recipient has to pay the GST directly to the GST department, not the supplier. Next, third person is called as manufacturer of silk yarn. So the person who is manufacturing silk yarn by way of extracting from the silk worms. This manufacturer, if he is selling silk yarn to a registered person, then the registered person has to pay GST under RCM. And in the case of lottery tickets, generally state government, union territory and local authority will conduct lotteries. So in this case, this government will sell lottery tickets not to the common people, rather they will sell lottery to the lottery distributors. Sometimes we call it as selling agents. In those cases, the government is saying that the recipient who is a lottery distributor or a lottery agent or a selling agent, they has to pay GST directly. That means the recipient is paying what? GST directly to the department. Most important thing, PSLC. Sir, what is PSLC? PSLC is called as Priority Sector Lending Certificates. So basically, PSLC is a transaction that happens between one bank and another bank. So when a transaction happening between two banks, and what is the good we are talking about? PSLC, in such case RCM will apply. We had a very brief discussion in our class. I'll tell you an overview of this thing. So basically, this priority sector lending certificates are traded through a portal called as eKuber. There is a portal in RBI called as eKuber portal. Sir, in this eKuber portal, the bank who are having PSLCs, they can sell the PSLC, whereas the other bank can purchase the PSLC. But the problem is, either the seller or the buyer don't know each other. The platform designed in such a way that both the seller and the buyer don't know each other. If the seller and buyer don't know each other, how can a seller will issue an invoice to the buyer? Because if the seller is issuing the invoice, seller has to mention the GST details of the buyer. But without knowing who is our buyer, can we mention the GST details of the buyer? No, practically not possible. That is what government is saying. Since the seller don't know who is the buyer, so we cannot apply the concept of FCM. So charge what? RCM. And one most important point is, sir, we are charging RCM. Yes, that is correct. Whether the supply should be treated as intrastate supply or interstate supply. See again, what is intra and what is inter? If the location of supplier and place of supply are same, we call it as intra. If the location of supplier and place of supply are different, we call it as inter. So in such situation, we need to know that the location of supplier and the place of supply. But here, as a seller, whether he know who is buyer, don't know. So that is why it is not possible to determine the place of supply. So hence we can't determine whether it is intra or inter. So again the government said, since you don't know what is this type of transaction, treat this transaction as intra. Treat the transaction as what? Intra. So we are going to levy what? IGST on this transaction. So these are few notified goods, but remember always in our syllabus, services are the thing that is most important. So now we are focusing on the services. The first service we have is what? GTA. So basically, GTA. Who is a GTA? Goods Transport Agency means the person who is transporting goods by road. Condition number one. Second one, he need to issue a note called as consignment note. When these two conditions are satisfied, we call it as GTA. So in the case of GTA, when RCM will apply? So remember, GTA can provide services to two types of people. They can provide services to registered person. They can provide services to unregistered person. If a GTA is providing service to registered person, to all registered persons, RCM will apply. That means, example, I am a person who has taken registration under GST. I took some services from GTA. Now GTA is the supplier, I am the recipient. Now what government is saying, since I am the registered person, I have to pay GST directly to the government. RCM will apply. However, if a government taken registration for the purpose of deducting tax, we call it as TDS under section 51. Government has taken registration. Why government has taken registration? For making supplier? No. For deduct tax as per which section? 51. In this case, GST will be exempt. What is the meaning of exemption, sir? No RCM, no FCM. So, tell me what is the provision here? GTA is providing service to all the registered persons. Then what happens? RCM will apply. But if the government taken registration for the purpose of deducting tax under section 51 and GTA is making supply to the government, then RCM will apply. That is exempted. That is exempted. So this is with respect to what? Registered persons. Next, GTA providing service to unregistered persons. In this case, there are two types of unregistered persons. We call it as Scoop FBC and others. Sir, what is Scoop FBC? Sir, in the case of Scoop FBC, S means society. COO, cooperative society. P, partnership firm. F, factory. BC, body corporate. Sir, all these five people are what? They are not taken registration under GST. If a GTA is providing service to Scoop FBC, then RCM will apply. Sir, now the question comes, sir, Scoop FBC, the people are unregistered persons, then how RCM will apply? Because GST provisions applicable only to a registered persons. But here, Scoop FBC is an unregistered person. So that is why these people, if they are taking any service from GTA, they need to take a compulsory registration. What will apply? Compulsory registration will apply. That means they need to take registration and pay GST under reverse charge mechanism. This is in the case of unregistered persons, scoop FBC. What about others? In the case of others, it is exempt. It is what? Exempt. So who is the supplier? GTA. GTA is providing service to all the registered persons. RCM will apply except government taken registration for the purpose of deducting tax under section 51. GST is exempted. Next, GTA is providing service to unregistered persons. To all the unregistered persons it is exempt except scoop FBC. In the case of scoop FBC, what happens? RCM will apply. What is scoop FBC? Society, cooperative society, partnership firm, factory and body corporate. RCM will apply. If they don't have registration, they need to take what? Compulsory registration. So this is RCM in the case of GTA. However, the rate specified is, in the case of RCM, the rate of GST is 5%. What is the rate of GST? 5%. In the case of FCM, that means GTA has option to charge GST under FCM also. The government gave option to GTA itself. Babu, if you want to opt for RCM, opt for RCM. If you opt for FCM, opt for FCM. But if the GTA is opting for FCM, the rate of GST is 12%. That is 6% plus 6%. That will be what? That will be the rate of GST. RCMA rate of GST is 5%. FCMA the rate of GST is 12%, which will be 6% plus 6%. So this is the concept in the case of what? GTA. I hope this is clear. Second one, the supplier is advocate, senior advocate or firm of advocates. These three people, any of these persons providing service to a business entity, RCM will apply. One advocate is providing service to business entity, RCM. Senior advocate providing to business entity, RCM. Firm of advocates providing service to business entity, RCM will apply, provided they need to provide which service? Legal services. However, there are few exemptions. What is the first exemption? Sir, the business entity whose aggregate turnover is up to registration limit. That means there is one business entity, its turnover is 18 lakhs. Generally, when registration is required, if turnover exceeds 20 lakhs, but in the case this business entity is having turnover of 18 lakhs and the business entity took service from advocate. In such a situation, RCM will not apply, FCM will not apply. That means this is what? Exempt, because RCM will be applicable to those business entities to whom the registration is applicable. That means those business entities whose aggregate turnover exceeds the registration limit. Next point, any person other than business entity, the legal services are exempted. Suppose I'm an individual, I took legal services for my personal purpose. In such situation, no GST will be levied. Next, one advocate or firm of advocates. We excluded senior here. Advocate or firm of advocates giving services to advocate or firm of advocates, the said service is exempted. Remember always, here who are covered? Only advocate, firm of advocate providing service to advocate or firm of advocates, the GST will be exempted. If the senior advocate is involved, no exemption will be given. Next, if these advocate services taken by the government, then also GST will be exempted. So these are the exemptions with respect to legal services provided by advocate, senior advocate and firm of advocates. Then we have a arbitral tribunal providing services to what? Business entity located in taxable territory. Sir, if you remember, there is something called as schedule number 3. What is schedule number 3? Neither goods nor services. Services provided by any court or tribunal which is established under any law for the time being in force will be treated as neither goods nor services. That means generally arbitral tribunal services will be treated as neither goods nor services. If it is not a good, not a service, whether GST provisions will apply? No. Then where we get this RCM concept? So Schedule 3 covers the arbitral tribunals which are established under law. Example we have in the case of GST, GST Appellate Tribunal. In the case of Companies Act, there is something called as NCLT. So these are the tribunals which are established by the law. So any service provided by these tribunals are generally exempted. But here, these arbitral tribunals are those tribunals which are not established by the law. Since they are not established by the law, if they are providing any service to business entity, what will apply? RCM will apply, and there are some exemptions same as advocate. First one, to the business entity whose aggregate turnover is up to the registration limit. What is the example we took? The business entity whose turnover is 18 lakhs, they took some arbitral tribunal services. So since 18 lakhs is less than the registration limit, so no GST will be applied. Second one, any person other than the business entity, no GST will be levied. Next one, services are taken by the government, no GST will be levied. So exemption will follow the same for both legal services and arbitral tribunal services. I hope these 2 points are clear. Renting of immovable property. Sir, in the case of renting of immovable property, we have two things. One is called as renting of residential dwelling. Second one, renting of other than residential dwelling. Precisely, we call it as commercial property. So the person is taking immovable property on rent. There are two properties. One is called as residential dwelling. The other one is called as other than residential dwelling. Residential dwelling means what? For the purpose of stay. Other than residential dwelling means what? For the purpose of doing commercial operations. So first thing, renting of immovable property for purpose other than residential dwelling. That means what we are talking about, for residential purpose or for commercial purpose? For commercial purpose. So remember, any person who is taking immovable property for commercial purpose, check the supplier, then check the recipient. Supplier may be registered person, supplier may be unregistered person. First thing, if the supplier is registered person, then irrespective of recipient, FCM will apply. We are talking about which property? Commercial property other than residential dwelling. If the supplier is whom? Registered person, then don't bother about the recipient. Always what will apply? FCM. Next, if the supplier is unregistered person, that means supplier can collect GST, supplier cannot collect GST, supplier cannot collect GST. In such a situation, check who is the recipient. Recipient is a registered person. So that means recipient is already registered under GST. Supplier is not registered under GST. Now tell me, from the government point of view, it is easy to collect tax from the supplier, from the recipient, because supplier is unregistered, but the recipient is what? Registered. So in this given case, RCM will apply. So in the case of commercial property, that is renting of other than residential dwelling, when RCM will apply? Supplier is who? Unregistered person. and the recipient is registered person, then RCM will apply. But remember guys, there is one amendment here. The amendment says registered person other than composition dealer. That means the person has taken registration, but the person opted for composition scheme, then RCM will not apply. See, I'll tell you here. Supplier is unregistered person. Recipient is a registered person. But there are two types of registered persons: who opted for regular scheme, who opted for composition scheme. If the supplier is unregistered person and the recipient is a regular registered person, only in this case RCM will apply. If the recipient is a registered person and opted for composition scheme, in this situation no GST will be levied. So this composition point is a new point inserted in the act by way of amendment. So tell me which property we are talking about? Commercial property. If the supplier is registered person, always FCM. If the supplier is unregistered person but a recipient is a registered person opted for regular scheme, RCM will apply. Recipient is a registered person but opted for composition scheme, no GST will apply. I hope this is clear. Okay, now next we will talk about renting of residential dwelling. That means which property? Commercial property or residential property or residential property. Here supplier can be any person. Supplier can be any person, but the recipient is a registered person taken renting of residential dwelling for business purpose, then RCM will apply. Example, sir, we started a new restaurant business. So we hired 15 labor from some other state. Example, we recruited people from Bihar. From Bihar, we recruited 15 people who are working in our restaurant. So, since they are coming out of the state, we promised them that we will provide the residents. The restaurant will provide the residence to the people. So now the business is taking what? Renting of residential dwelling for personal purpose or for business purpose? For business purpose. Yes or no? In this situation, since the recipient is a registered person, RCM will apply. So this is two concepts: commercial property as well as residential property. So in the case of renting of residential dwelling, when RCM will apply, supplier can be any person, recipient is a registered person taking renting of residential dwelling only for the purpose of business, RCM will apply. Sir, what if, example, I am a registered person, I have registration under GST. What I did is, I took one renting of residential dwelling for my personal purpose, for my stay. Sir, whether RCM will apply? No, because that is business purpose or personal purpose. In the case of personal purpose, no GST will be levied. So I hope these two concepts are clear. So we discussed with respect to what? Immovable property. So now we will discuss some few small things. First one, director providing service to a company or a body corporate. In such cases, what happens? RCM will apply. Because think from department point of view. So for the government, it is easy to collect GST from one company or from many directors. So directors are many, companies are few. So it is easy to collect GST from the recipient. So RCM will apply. Next, we have the agents. So there is one insurance agent. This insurance agent is providing service to the insurance companies. Then the insurance company has to pay GST under reverse charge mechanism. There is a recovery agent. So this recovery agents are providing service to whom? They are providing to banking, financial institution and NBFCs, in such cases, the recipient, the bank, the financial institution or the NBFC has to pay GST under what? RCM basis. Next we have there are members of overseeing committee. Sir, RBI constituted a council called as overseeing committee. Sir, what this overseeing committee people will do? All these people in this specific committee all are the high professional people. They are all the retired people who is having vast knowledge in different sectors. So all these people will guide all the banks about the bad debts. About what? About the bad debts. So these members are providing services to whom? RBI. So hence the RBI has to pay GST under reverse charge mechanism, because remember, these members are not the employees of the organization, rather these are giving the professional services. Next we will talk about something with respect to the banking scheme. So in the banking, remember there are three different types of people working. One we called as DSA, direct selling agent. Next we have business facilitator. Next we have business correspondent. First I'll tell you the difference between these three terms. So first term, business facilitator. Sir, who is a business facilitator? Sir, business facilitator is a person, they will genuinely create awareness about the banking business. So they will go to urban areas, they will go to rural areas where people don't have any knowledge about the banking. These people will guide about how the money will be safe when they deposit in the bank, or what are the various schemes offered by the bank. So these people are promoting the banking business. So these people are called as what? Business facilitators. Sir, whereas business correspondents, so business correspondents are one step ahead. Rather than promoting, these people will perform basic banking activities. Sir, example, they will accept deposits, they will give you withdrawal option, they will open accounts. So these are the people providing the banking activities. They are called as what? Business correspondents. Sir, whereas DSA, these people focused on selling banking products. These people are selling loans. These people are selling credit cards. Can I say all the schemes of the bank these people are selling? These people are called as direct selling agents. So that is the difference between a facilitator, a correspondent and a direct selling agent. So let's discuss when RCM will apply, when RCM will not apply. So for your easy reference, I'll draw a chart here. Business facilitator giving service to a bank. However, the business facilitator may appoint agent also. Whereas business correspondent, they are also giving service to bank. If they needed, they appoint the agents. Okay, now remember, the agents will give service to the facilitator, yes, and facilitator will give service to the bank. Same way, agent gives service to the correspondent and correspondent will give service to the bank. The first thing, for your easy reference, remember F. F means free. Sir, what is the meaning of free? Free means business facilitator will not pay any GST directly to the government. That means, see this transaction. Business facilitator is giving service to the bank. That means business facilitator is a supplier, bank is a recipient. As I said you, whether facilitator will pay GST to the government? No. That means government wants GST, government collects GST from the bank. So bank is a supplier or recipient? A recipient. When recipient is paying GST to the government, what is the mechanism? Reverse charge mechanism. Okay, now that means if the facilitator is giving service to the bank, RCM will apply. Sir, what about here? Agent is giving service to facilitator. Agent is a supplier, facilitator is a recipient. As I said you, whether facilitator will pay GST? No. That means who is paying? Agent. Agent means who is agent? Supplier. Supplier means FCM. I hope this is clear. Quite opposite in the case of correspondent. Always the burden is on the correspondent. That means correspondent is the supplier, bank is the recipient. The burden will be taken by the correspondent. That means the correspondent is paying GST, supplier is paying GST. What does it mean? FCM. Whereas there is agent and there is a correspondent. As I said you, the burden is on the correspondent. Correspondent is a recipient. Agent is the supplier. When recipient is paying GST, what will apply? RCM. So now tell me, in the case of facilitator, when RCM will apply? Business facilitator is providing service to the bank, then the bank has to pay GST under RCM basis. What about the correspondent? In the case of correspondent, what happens? Agent is giving service to the correspondent. So the correspondent has to pay the GST because burden is on the correspondent, RCM. What if the correspondent is giving service to the bank? The correspondent has to pay the GST. Who is the correspondent? Supplier. That means what will apply? FCM. So remember this kind of funda. I think it will be easy to remember. Okay, now with respect to direct selling agent. So remember first thing, when it comes to direct selling agent, he must be individual. So supplier must be individual direct selling agent and he is providing service to a bank or NBFC, then RCM will apply. So when RCM will apply, the supplier should be a direct selling agent and he must be an individual and he is giving service to a bank or NBFC. In such situations, the RCM will apply. I hope this is clear. So the next segment is with respect to author, artist, music composer, photographer or any kind of similar people. So basically these people will provide services to him. Generally author will provide service to, he'll publish a book, so he wanted to get his book published by some publisher. So author to publisher or artist to a producer, photographer to a producer, music composer, maybe a music company or maybe a producer or any other similar people. So if these people are giving any services to these people, the publisher, producer or the music companies. So can I say all these people are called as suppliers and all these people are called as what? Recipients. In such situation also RCM will apply. These people have to pay GST under RCM basis. So what if, sir, one important point in the case of author, remember this point is only in the case of author. Author is having option to charge GST under FCM also. That means generally author providing any service to publisher, by default RCM will apply. But however, if author wants, he can opt FCM also. That means the author can collect GST and deposit GST to the government. This option is given only to whom? To author. Rest other people only what will apply? The RCM will apply. I hope this is also clear. So we are done with direct selling agent. We are done with author. Next we are done with the music composer. And we are done with all the agents part. So the next segment, we will discuss these things in a group. Sponsorship services, security services, renting of motor vehicle. Even when you are studying for your examination, study these three things in a group. Sir, why? Sponsorship or security or renting. The first thing is there must be a supplier and there must be a recipient. Yes or no? Remember, in all these three cases, supplier is a person other than body corporate. In the case of sponsorship, or in the case of security, or in the case of renting of motor vehicle, who is the supplier? Always other than body corporate. So first let's talk about sponsorship services. So tell me, in the case of sponsorship, who is the supplier? Other than body corporate. Providing services to, that means the recipient may be body corporate or partnership firm. RCM will apply. So tell me now, in the case of sponsorship services, when RCM will apply, supplier is other than body corporate and the recipient is body corporate or partnership firm. Partnership firm always includes what? LLP, then RCM will apply. Next thing, in the case of security services, same. Who is the supplier? Supplier is other than body corporate. Sir, remember here the recipient is registered person. Okay, na? Sir, there are multiple types of registered person. Example, government taken registration for the purpose of deducting tax under section 51, or the person taken registration under GST but opted for a composition scheme. This is other. So supplier, who is a supplier other than body corporate? And there are three types of recipients. Recipients number one, other than these two. Next, recipient number two, government taken registration for the purpose of deducting tax under section 51. Number three, the person opted for a composition scheme. Sir, in the case of TDS or in the case of composition scheme, it is always FCM. That means the supplier has to pay the GST. But if the recipient is any other registered person, in this case, RCM will apply. What will apply? RCM will apply. So this is about what? Security services. Next, renting of motor vehicle. Sir, as we discussed, who is the supplier? Other than body corporate is the supplier. Next thing, the recipient is a body corporate. That means services provided by any person other than body corporate to a body corporate. Here also what will apply? RCM will apply, but same as GTA, the person who is renting the motor vehicle has an option to charge GST under FCM also. But if he opted for RCM, the rate of GST is 5%. If he opted for FCM, the rate of GST is 12%. So this is with respect to renting of motor vehicle. So we are done with the security services. We are done with renting of motor vehicle, and we are done with what? Sponsorship services. So we are done with the entire concept except the government. So we will discuss the government now. Sir, in the case of government, this is something that is most important for you. Sir, we will divide the entire government into 6 different parts. First one, services provided by Indian Post. Services provided by Indian Post. So basically, this Indian Post will provide two types of services. In a regular class, we call them as PIBO, postcard, inland letter, book post, and ordinary post, weight generally less than 10 grams. Next, any other. Example, speed post, express parcel post. Sir, if Indian Post is providing PIBO, basically this PIBO is the exclusive services offered by Indian Post. Hence, they are exempted. They are what? Exempted. Sir, anything other than PIBO, remember always FCM will apply. That means in the case of Indian Post, either the service may be exempted or the service may be covered under FCM, but there is no concept of RCM. I hope this is clear. The second category is railways. Railways also same. If anything covered in exemption chapter, then that is exempted. If it is not exempted, that is always covered under FCM. There is no concept of RCM. So whenever you see any services provided by railways, it may be exempted or it may be covered under forward charge mechanism, but RCM will not apply. Third one, services provided by way of airport or port providing to vessel or aircraft. So generally in India, these airports or all the ports are under the control of the government. So if this airport or port providing any service to vessel or aircraft, remember always FCM will apply. That means total three scenarios we discussed: Indian Post, railways and airport or port. All these cases, either it may be exempted or it may be FCM. Till now we haven't seen the concept of what? RCM. Fourth one, transportation services provided by the government in relation to passengers or goods. So government is providing transportation services by way of transportation of goods or transportation of passengers. Here also exemption. If not exemption, FCM. There is no concept of RCM. Fifth one, renting of immovable property. Sir, sometimes the government can give on rent the immovable property owned by the government. Remember here, check to whom the government provided the renting. The government may provide to a registered person or it may provide to a unregistered person. So the supplier is the government and there are two types of recipients. One recipient is a registered person, other recipient is a unregistered person. If government providing renting of immovable property services to a registered person, in such situation RCM will apply. To unregistered person, FCM will apply. That means out of 5 scenarios, only in one scenario RCM will be applicable. What is that scenario? Renting of immovable property to a registered person, RCM will apply. Then last point, sixth one, any other services. What is the point? Any other services. Apart from above 5, if government is providing any services to a business entity, see the condition here. Business entity aggregate turnover is more than registration limit. This is the first condition. What is the first condition? There is a business entity. The business entity turnover should exceed the registration limit plus value of supply should be more than 5,000. When these two conditions are satisfied, then RCM will apply. So anything other than above 5, if government is providing service check to whom the service has been provided. If this service has been provided to a business entity, check its aggregate turnover. If the business entity aggregate turnover is more than the registration limit and the value of supply is more than 5,000, when these two conditions satisfied, then RCM will apply. Remember, any of the condition is not satisfied, then the same will be exempted. Any condition, if it is not satisfied, then the same will be exempted. So this is about section number 9 subsection 3. Topic endama. The topic we call it as reverse charge mechanism, notified goods and notified services. Then we have 9 subsection 4. First I'll tell you the logic, sir, why 9 subsection 4 has been introduced. Sir, example, there is a person called as promoter. Basically, right now 9 subsection 4 applicable only in the case of real estate sector. So the person who is constructing immovable property is called as promoter. Sir, once the construction happens, if the residential property this promoter is selling, if the residential property this promoter is selling, government generally collect 1% or 5% depends upon affordable housing or normal housing. If the consideration received after first occupation or completion certificate, whichever is earlier, then government will collect no GST. That means, can I say, in the case of immovable property, generally the government is charging lesser GST or no rate of GST. That means the government is losing their revenue here. So the government said, Babu promoter, for this immovable property, you might need to purchase many inputs. When you are purchasing these inputs, remember the promoter cannot claim the ITC. So to construct any immovable property for residential purpose, if the promoter is purchasing any inputs, on those inputs, promoter is eligible to claim ITC, ineligible to claim ITC, ineligible to claim ITC. My example, promoter purchased goods from X. The value is 10,000 and GST is 1800. So now tell me whether promoter, after making payment of 1800, can he claim 1800 as input tax credit? No, because government clearly said he is not eligible to claim the ITC. Then what happens to this 1800 with respect to the promoter? Whether that will be an asset or that will be a cost? That will be a cost. So what is the entire cost for the promoter? 11,800. So what promoter did is, promoter went to a unregistered person. To whom? Promoter went to a unregistered person and he started purchasing goods from unregistered person. Sir, why he went to unregistered person? Because unregistered person will not collect GST. Unregistered person will collect only how much? 10,000 rupees. By doing this way, can I say the promoter is going to save 1800 rupees? Sir, to reduce these kind of transactions, government introduced a section called as 9 subsection 4. These transactions are okay because government wants GST, promoter is paying GST. But the problem is with a purchase made from registered person, purchase made from unregistered person. The problem is with the purchase made from unregistered person. So 9(4) will be applicable only in the case of purchases made from unregistered person. So let's see what is the provision here. Sir, if the promoter purchases goods from unregistered person, then RCM applies. First thing, any goods with respect to capital and cement. So cement is an input, but government is saying that two things, any capital good or cement, 100% should be purchased from registered person. Entire thing, all the capital goods and all the cement requirement should be purchased from whom? Should be purchased from a registered person. Sir, what if I purchased 99 lakhs from registered person, 1 lakh from unregistered person? Government said 100%, but I purchased 1 lakh from unregistered person. So government is saying, promoter, since you made a purchase of 1 lakh from unregistered person, pay GST under RCM. On this 1 lakh, pay GST under RCM. In this situation, RCM will apply on 1 lakh. Clear? Yes. Next thing, inputs. Any input other than cement, except cement, if the promoter is purchasing any input, government is saying that a minimum of 80% should be purchased from a registered person. Example, if we are purchasing total 1 lakh worth inputs, how much inputs? 1 lakh. The government is saying out of 1 lakh, if you are purchasing 80,000 from registered person, 20,000 from unregistered person, there is no problem. Government is happy. But government is saying, if you purchase less than 80%, let us say you purchased 75,000 from registered person, 25,000 from unregistered person. What is the total inputs? 1 lakh. Government said at least 80% should be purchased from a registered person. That means you need to purchase how much amount? 80,000 worth. But you purchased only 75,000 worth. So the difference is how much? 5,000. On this 5,000 difference, RCM will apply. This is section number 9 subsection 4. What is 9 subsection 4? Capital goods and cement 100% you need to purchase from registered person. Any difference RCM will apply. In the case of inputs, 100% we need to purchase or only 80%? Only 80%. Any percentage less than 80 on the difference, what happens? RCM will apply at what rates? Generally the rate of GST will be 18%, but if it is in the case of cement, the rate of GST will be 28%. So next thing, 9 subsection 5. So basically, there is something called as e-commerce operators. What is that? E-commerce operators. Under GST, these e-commerce operators are covered under two different sections. One is 9 subsection 5. The other one is 52. Sir, what is 9 subsection 5? We call them as specified e-commerce operators. Total there are 5 specified e-commerce operators. For them 9(5) will apply. All the other e-commerce operators, for them section 52 will apply. This talks about TCS. So let's discuss 9(5). What is 9(5)? A general section or a specific section? Specific section. Only how many e-commerce operators are covered? 5 e-commerce operators are covered. I'll give you a glance. In the case of every e-commerce transaction, there are 3 parties involved. One party is called as e-commerce operator, actual supplier, and the recipient. So generally, there are 2 parties in any transaction, supplier and the recipient. But in this specific case, there is one more party coming in. They are called as e-commerce operators. So now government wants, from whom government wants GST. So government is clearly saying that who is the person liable to pay GST as per section number 9 subsection 5. So first case, transportation of passengers by way of radio taxi, motor cab, maxi cab, motorcycle, any other mode except omnibus. Can I say the first case is about transportation of passengers by any mode except what? Bus, omnibus or bus, both are same. So in the case of transportation of passengers other than omnibus, liable to pay tax is the e-commerce operator. Example, Rapido, Ola, Uber. Sir, if any person providing transportation services through Rapido, Ola or Uber, the liability to pay GST to the government is on the e-commerce operator, not on the actual supplier. So who is liable to pay? The e-commerce operator. Sir, in the case of omnibus, red bus, abibus is there, no? In such a case, check who is the supplier. Supplier is company, supply is other than company. If the supplier is a company, I'm talking about supplier, not the e-commerce operator. If the supplier, the person providing the bus services, if it is a company, then the company has to pay the GST. If it is other than company, then e-commerce operator has to pay the GST. This is with respect to omnibus. Next one, housekeeping services such as plumbing, carpentering work, etc., and accommodation services in hotel, in guest house. These two cases, housekeeping case and accommodation case, in these two cases, check whether the supplier is liable for registration. Sir, when supplier is liable for registration? When the supplier's aggregate turnover exceeds the registration limit. If a supplier is liable for registration, supplier is liable to pay GST. If the supplier is not liable for registration, e-commerce operator is liable to pay GST. Okay, now in the case of housekeeping and in the case of accommodation services, check whether the supplier is liable for registration or not. If the supplier is liable for registration, supplier. If supplier is not liable for registration, then the e-commerce operator. And the last one, restaurant services. Sir, by default, remember, in the case of restaurant services, always e-commerce operator has to pay GST. Tell me once more. In the case of restaurant services, always the e-commerce operator has to pay the GST. But remember one important point. If the restaurant is located at a specified premises, what is that? If the restaurant is located at a specified premises. Sir, what is the meaning of specified premises? Sir, example, there is something called as ITC hotels. ITC hotels will provide accommodation services. Sir, along with accommodation services, in this particular hotel, ITC is having a restaurant also. Okay, now this particular restaurant is listed on Swiggy. Okay, now so now the restaurant is providing services through Swiggy to a customer X. Now, the specified premise means the restaurant is associated with the hotel. This hotel is providing accommodation services. Must check any one unit, at least one room per day cost more than 7,500. At least one room where the restaurant is located, if they're providing accommodation services, at least one room, the value should be how much? More than 7,500. Then we call it as the restaurant located at a specified premises. So if the restaurant is located at a specified premises, then Swiggy is not the person liable to pay GST. The restaurant is liable to pay the GST. So this is with respect to what? Section number 9, subsection 5. So I hope we are clear with section number 9 that we discussed 9.1, 9.2, 3, 4 and 5. 1 and 2 talks about non-taxable supplies. 3 and 4 talks about reverse charge mechanism. 5 talks about specified e-commerce operators. First thing we talk about transportation of passengers. By default, e-commerce operator is liable to pay GST. In the case of omnibus, omnibus is a company has to pay GST. Omnibus is other than company, then e-commerce operator has to pay the GST. Then we have seen housekeeping services and accommodation services. In that case, check whether the supplier is liable for registration. If the supplier is liable for registration, supplier has to pay GST. If the supplier is not liable for registration, e-commerce operator has to pay GST. In the case of restaurant, by default, restaurant has to pay GST. But if the restaurant is located in a specified premises, then the restaurant has to pay the GST. So I hope these concepts are clear. Okay. So sir, now we will discuss a chapter called as composition scheme. So normally every registered person will opt for a normal scheme. However, government bought a scheme called as composition scheme to help small tax payers. To help whom? Small taxpayers. So government gave a bit relaxation to these people. So this specific scheme will be applicable to all the people. The answer is no. Only to the people specified can opt for composition scheme. So the benefit of composition scheme will be lesser number of returns and lesser rate of GST. So the section that we are talking about is section number 10. Sir, section number 10 talks about the composition scheme. First, remember, as I said, you small taxpayer. Sir, the person to become eligible for the composition scheme, government notified three people. One is called as MTR, manufacturer, trader, restaurant, and catering services. These three people are only eligible for the composition scheme. So if you see, as per section number 10, right now we are talking about 10.1. So 10.1, the focus of eligibility is only in the case of goods, manufacturer and trader. Whereas in the services, whether all the services are covered, no, only one service has been covered. What is that one service? Restaurant and catering services. So only M, T and R is eligible for the composition scheme. Sir, when these three people are eligible? These three people are eligible only when their previous year aggregate turnover. Which year aggregate turnover? To become eligible for composition scheme in the current year, I need to check the eligibility of the previous year. So my previous year aggregate turnover should not exceed 1.5 crores. So in my previous year, if my aggregate turnover is up to 1.5 crores, then in the current year, I am eligible to opt for a scheme called as composition scheme. So remember, however, in the case of, we call them as SUMA and MMNT, Manipur, Mizoram, Nagaland, Tripura, Sikkim, Uttarakhand, Meghalaya, Arunachal Pradesh. Sir, from these 8 states, we call them as special category states. So, if a person is registered in any of these states, and if he want for a composition scheme, then for him the previous year limit is not 1.5 crores, the limit is 75 lakhs. What is the limit? 75 lakhs. Normally MTR in any state the limit is 1.5 crores, but in the case of SUMA and MMNT the limit will be 75 lakhs. Now the question comes, sir, previous year we are checking aggregate turnover. What is the meaning of that aggregate turnover? See, aggregate turnover includes every supply. Every supply means the taxable supply and exempt supply. Sir, what is the meaning of exempt supply? Exempt supply means non-taxable, nil rate and exempt supply. So aggregate turnover includes taxable supplies and exempt supplies. What is the meaning of exempt supply? Exempt supply is equals to non-taxable plus nil rate plus exempt, and it includes zero rated supplies. What is the meaning of zero rated supplies? Exports or supply made to SEZ units is called as zero rated supplies, and it includes interstate supplies from one state to another. Whatever the supply you made, all these supplies should be included in the aggregate turnover. So in simple terms, can I say whatever is the supply, that supply should be included in the aggregate turnover. However, it excludes, which excludes, the aggregate turnover excludes any taxes payable under GST. Sir, as I said you earlier, what are the taxes that are payable under GST? CGST, SGST, IGST, UTGST, GST compensation cess. These 5 taxes are not included in the aggregate turnover. All the other taxes are included in the aggregate turnover, but taxes that are paid under GST are not included in the aggregate turnover. Next, any inward supplies in which tax payable under RCM. Sir, we are calculating aggregate turnover. Turnover means my sales, my purchases, my sales. When I calculate my sale, should I include my purchases? No. That is why inward supply is on which tax payable under reverse charge basis should be included, should be excluded, should be excluded. Next thing, Any loans, deposits, advance where the consideration represents in the form of interest, they should be excluded. So 4 inclusions, 3 exclusions. If we calculate the entire thing, then we are getting the aggregate turnover. And remember, while calculating the limit of 1.5 crores, while calculating the eligibility limit, remember the value of supplies from 1st April till the date of registration should also be included in the calculation. Suppose this is the current year, this is the previous year. To become eligible for the current year, I need to check my previous year. So previous year I started the business. On 1st April I started business. On 30 June my turnover exceeds the 20 lakhs limit. So after 30 June I opted for registration and I made a supply of 1.2 crores. Now tell me what is the aggregate turnover in my previous year, whether it is 1.2 crores or 1 crore 40 lakhs. The answer is 1.2 crores plus 20 lakhs. Total will be 1.4 crores. That means we need to add a supplies which is made from 1st April till the date of registration to the aggregate turnover. This is most important point in the case of what? Calculation of aggregate turnover. Okay, 3 people are eligible. Who are the 3 people? Manufacturer, trader, restaurant and catering services. Sir, what are the special rates applicable to them? Sir, for them the applicable rate is, if you are a manufacturer, calculate turnover in the state, in that particular state how much sales you made, and the rate of GST said is 0.5 plus 0.5. Remember, here we need to calculate total turnover. Total turnover includes taxable supply and exempt supply. On that total turnover multiplied by 0.5% CGST, 0.5% SGST, that is the rate of GST. So special rate, the rate will be 1%. Whereas if you are a trader, trader means the one who purchase the goods and the one who sell the goods. In the case of trader, some relaxation has been provided. The turnover is not total turnover, it is taxable turnover. That means only taxable supply, and the rate of GST is 1%. CGST 0.5, SGST 0.5. Wherever you are providing the restaurant and catering services, because only one service is notified, here the rate of GST is total turnover in the state multiplied by 2.5, 2.5, that is 5%. That means in the case of goods, 1% GST. However, manufacturing may 1% GST calculated on the total turnover. In the case of trader, 1% is calculated on the taxable turnover. But when it comes to restaurant and catering, in that case, the rate of GST is notified as 2.5 plus 2.5. So next most important thing, cases where a composition scheme is not available. Who are the people is not eligible for the composition scheme? Sir, any person who is making non-taxable supplies. Sir, what is the meaning of non-taxable supplies? Alcoholic liquor for human consumption, rectified spirits, extra neutral alcohol, HP man, high speed diesel, petroleum, crude, motor spirit, aviation turbine fuel, and natural gas. All these 8 items are called as non-taxable supplies. So let us assume you have a restaurant. In the restaurant, if you are supplying alcohol, then you are not eligible for the composition scheme. That means you need to opt which scheme? Regular scheme. Second one, a person engaged in making interstate supplies. If you are selling goods from one state to another state, then also you are not eligible for the composition scheme. Next, a person who is supplying services. What are the services that are notified? Restaurant and catering. So except restaurant and catering services and a marginal supply of services, you should not provide any services. A CTP, NRTP is not eligible for the composition scheme, and any person who is supplying services through e-commerce operator for which the tax has to be deducted under section 52. We have TCS provisions. So TCS provisions under section 52, the person who is supplying services through e-commerce operator, they are not eligible for the composition. However, the person who is supplying goods through e-commerce operator is eligible for the composition. Next, a person who is manufacturer of the notified goods. Remember the word we focused on, manufacturer. If the person is trading these goods, he is eligible for the composition. Only the manufacturer is not eligible for the composition. Manufacturer of all the goods are no, only notified goods. What goods? Generally we call them as sin goods. Ice cream and edible ice, pan masala, tobacco products, aerated water, cool drinks, fly ash bricks, building bricks, earthen and roofing tiles. If you're manufacturing any of these goods, then you are not eligible for the composition scheme. So these 6 people are not eligible for the composition. Sir, earlier in the case of services, we said like if a person is supplying services, he is not eligible for composition. However, he can provide which services? Marginal supply of services. Sir, now we will discuss what is marginal supply of services. Sir, basically, suppose example, we have a Kirana store. We have a Kirana store. That means, can I say we are the traders? Sir, but it is quite common that in the Kirana store, we may offer free delivery or we may offer paid delivery. That means we are providing the services also. See, my main business is selling goods, but to increase my business, I provided a delivery option. That means I am also providing some amount of services. But my majority task is goods. Just because I am providing few amount of services which is directly related to my main business, if I am not eligible for the composition scheme, then the purpose of composition scheme will not be going well. So that is why government is saying that since you are into trading of the goods or manufacturing of the goods, your main focus is that only. But apart from that, you may provide few amount of services, you are still eligible for the composition scheme. Sir, what is that few amount of services? First thing, manufacturer, trader, restaurant and catering. These 3 people can supply how much? 1.5 crores. But if these 3 people are providing any services, then they can provide maximum services of 10% of previous year aggregate turnover. Let us assume my previous year aggregate turnover is 140 lakhs. That means in the current year, I am eligible to provide any service up to 14 lakhs or 5 lakhs, whichever is higher. That means I am eligible to supply services worth up to how much? 14 lakhs. Okay, now? Next, section number 10(2)(a). Sir, what is this 10(2)(a)? 10(2)(a) means earlier we discussed about MTR. So the persons who becomes ineligible for the composition as per 10(1). So who are not eligible as per 10(1). Generally, any person other than MTR is not eligible for the composition. However, in the case of MTR also, if their services exceeds marginal supply of services, they are also not eligible for the composition scheme. Example, here how much services I need to provide? 14 lakhs. But I provided services worth 15 lakhs. Am I eligible for the composition or am I ineligible for the composition? Ineligible as per section number 10 subsection 1 and 2. Now the government is saying, don't worry. Since you becomes ineligible as per above provisions, you still have one option. Go to 10(2)(a). 10(2)(a) case law, any person is eligible for the composition provided his aggregate turnover in the previous year is up to 50 lakhs. Here the limit is only 50 lakhs. So previous year turnover is up to 50 lakhs. Then you can take a composition under 10(2)(a). Suppose example, I am a professional. So generally a professional can provide the services Am I eligible for the composition as per 10.1? No, because I'm not a manufacturer, I'm not a trader, I'm not a restaurant and catering service provider. So government is saying, Rajesh, you can go to section 10.2a and you can take the composition scheme. However, in order to become eligible, your previous year aggregate turnover should be how much? 50 lakhs only. If my turnover exceeds 50 lakhs, I am not eligible for the composition scheme. The rates of GST are 3% plus 3%. Here the rate of GST is 6%. Here also same provisions will apply. Should not make a interstate supplies, he should not be CTP, he should not be NRTP. In the case of e-commerce operator, he should not supply any services. All these conditions will be same. Important points. So the most important point is any composition dealer cannot claim ITC. On his purchases, no ITC will be given. Second thing, he cannot collect the tax from his customers. So when he cannot collect the tax from his customers, he cannot issue something called as a bill of supply. He cannot issue bill of supply. Next, composition is not a mandatory scheme. It is a which scheme? Optional scheme. Next, any goods we are purchasing on RCM basis, special rates will not apply. The regular rate of GST will apply. Next, a registered person who is having more than one registration, he need to opt the composition not for one branch. For all the branches, he need to opt for the composition. He need to mention on every signboard and every invoice that he is a composition taxable person, not eligible to collect the tax. Next, forms. So these are something important for MCQ point of view. So if you are a newly registered person, at the time of registration, if you want for a composition scheme, you need to apply for the composition in GST REG01, which is the form applicable for the registration. In the same form, you can apply for the composition. You already have a registration, now you wanted to opt for composition. Then before the commencement of the financial year, apply for composition in form number GST CMP02. Next, if you want to exit from the composition, apply in the form GST CMP04. To enter into the scheme 02, to exit from the scheme 04. Next, this provision is not relevant right now. If the proper officer has reason to believe that registered person is not eligible or violated any provisions, so you opted for composition, but proper officer find that you are not eligible for the composition. That means you are making non-taxable supplies, or you are making interstate supplies, or your turnover exceeds 1.5 crores. In that case, the proper officer will give you the notice. He will give you the notice in CMP05. For the notice, you need to respond within 15 days in form number 06. After you are giving your response within 30 days, the proper officer has to give the final reply whether he is accepting your reply or rejecting your reply in form 07. So these are the forms with respect to the composition, and the composition dealer has to file an annual return and has to file a quarterly payment also, GST CMP08 and GSTR 4, where we'll be discussing the same things in the chapter called as returns. So this is the chapter with respect to what composition scheme. So I hope these things are clear. Thank you for watching. Sir, first thing, what is the need for this chapter time of supply? So time of supply is relevant to determine at what point of time the liability arises on the supplier in the case of FCM, and the liability arises on the recipient in the case of RCM. So to determine the point of taxation, time of taxation, we are discussing a chapter called as what? Time of supply. So first thing, in this chapter we are focusing on especially two sections, that is section number 12 and 13. However, this 12 and 13 read with what? Section number 31 with respect to a chapter called as tax invoice. So in the case of time of supply, we are focusing on two things. One is the case of goods, section number 12. The other thing in the case of services, section number 13. That means in simple terms, in 12 we are talking about goods, whereas in 13 we are talking about services. And in the goods, again there are two categories. One is forward charge mechanism and the other one is reverse charge mechanism. Same as services, we are having two things, forward charge mechanism, reverse charge mechanism. So in simple terms, we are going to learn 4 points. What are the 4 points? Goods FCM RCM as well as services FCM and RCM. So first thing, goods. So section number 12 says, in the case of FCM, forward charge mechanism. What is forward charge mechanism? The supplier will collect GST from the recipient and deposit to the government. This mechanism is called as what? Forward charge mechanism. So when the mechanism is forward charge mechanism, time of supply is equals to date of invoice or last date of invoice, whichever is earlier. Simple. Sir, what is the time of supply? Date of invoice or last date of invoice, whichever is earlier. Sir, what is the meaning of date of invoice? It is a data where the actual invoice has been issued. So then what is the last date of invoice? Last date of invoice will be as per the time limit set under section number 31. So now we will discuss what is the last date of invoice in the case of what? Goods. So section number 31, time limit for issue of invoice. Sir, here we are having 4 different points, 4 different time limits for what? For the last date. When the supply involves movement, number one. When supply involves no movement, in the case of continuous supply, in the case of sale on approval basis. First thing, when supply involves movement of the goods. Sir, what is the meaning of supply involves movement of the goods? Supply involves movement of the goods means goods are moving from one place to another place. Generally, goods are moving from the place of supplier to the place of recipient. This movement can be caused by the supplier, that is a supplier promises to deliver the goods to the recipient, or this movement can be caused by the recipient, whereas the recipient is coming to the supplier and taking goods to his place, or it can be created by the transporter, where the transporter will collect the goods from the supplier and deliver to the place of recipient. In any given case, if there is a movement of the goods, what is the last date of invoice? So the last date of invoice is before or at the time of removal. So whenever we are removing goods from the factory or the store, on that day we need to issue the invoice. That is the last date. So compare the last date with the actual date, take whichever is earlier. So this is in the case of what? Supply involves movement. Sir, what if there is no movement? No movement means before the transaction and after the transaction, the location of the goods will remain same. In such case, the last date of invoice will be when the goods made available to the recipient. So whenever you are going to hand over the ownership to the recipient, that will be the last date for issue of invoice. Next, in the case of a continuous supply, what is the meaning of continuous supply? Remember always, continuous supply means it should involve any of the thing. One is successive statement or successive payment. So successive statement means every day a milk vendor is delivering you the milk. This is called as a continuous supply because we are not making payment daily, rather we are making payment every month. How we are making the payment? After the month he will give a statement. This is called as successive statement. Or else I promise to my vendor that whatever will be the supply, every month I will make a fixed payment of 2 lakh rupees. This is called as successive payment. So either there is a successive statement or there is a successive payment. We call it as a continuous supply. In such case, what is the last date of issue of invoice? Before or at the time of such statement or payment. So let us assume the supplier promised that every month the 5th he will issue us a statement. So on or before 5th we need to issue the invoice, that is the last date. And last one, in the case of sale on approval or return basis, the principal is sending goods to the agent. Agent may accept the goods or agent may return the goods. In such case, what is the last date of invoice? So the last date of invoice is before or at the time of supply. That means the date when the agent accepts, or 6 months from the date of removal, whichever is what earlier. So 6 months from the date of removal means from the date of removal from the principal premises. So in this way, we are going to determine the last date. After determining the last date, compare the last date with the actual date. Take whichever is slower. That is the time of supply. Sir, however, if the goods are specified actionable claims. Sir, we know what is specified actionable claims: lottery, betting, gambling, horse racing, casino, online money gaming. Sir, all these things are also called as goods? Yes, because goods includes actionable claims. If the goods are specified actionable claims, then time of supply is equals to date of invoice or last date of invoice. These two are common, or date of payment, whichever is earlier. Normally we will take what? Date of invoice or last date of invoice, but if the goods are specified actionable claims, we are taking or date of payment of the three, whichever is earlier. Okay, now so this is the case of what? Forward charge mechanism. Now we will see what is the case in the case of reverse charge mechanism. So remember, in the case of reverse charge mechanism, we are talking about the goods. So first think like this: date of receipt of goods, the date when we receive the goods, or date of making the payment. Receipt of goods, making the payment, two things over. Third one, 31st day from issue of invoice, whichever is earlier. What are the three things? Receipt of goods, making the payment, 31st day from issue of invoice, whichever is what? Earlier. Now the question comes, sir, what is the meaning of date of payment? Remember, date of payment means date of book entry, that is date of recording in books of accounts, or bank entry, date of debit or credit in bank account, whichever is earlier is called as what? Date of payment. So this is the case of what? Time of supply, both forward charge mechanism as well as what? Reverse charge mechanism. Next, the problem comes. Sir, what if it is not possible to determine time of supply as per the above information? Let us assume I don't have any proper information. In that case, the time of supply will be date of recording in books of accounts. Whenever you record you in books of accounts, that will be the time of supply. So this is the concept in the case of goods. Next, we will talk about services. So services is kind of little bit confusing. So what we will do is, first we will think from the steps. Remember, sir, first determine last date of invoice. Step number one. What is step number one? Determination of last date of invoice. Sir, where we will get this last date of invoice? As per section number 31. Okay, now take a actual date of invoice. Okay, check actual date of invoice issued on or before last date of invoice or after last date of invoice. Sir, what are the steps? First, take last date of invoice. Okay, next take actual date of invoice. Compare actual date with last date. See whether actual date is on or before the last date or after the last date. Sir, if actual date of invoice is before the last date, that means, can I say we issued invoice within the time period? Yes or no? Yes. So in that case, time of supply is date of invoice, date of payment, whichever is earlier. Sir, when the date of invoice or date of payment is earlier, if invoice issued within the time period, if invoice issued within the time period, time of supply is equals to date of invoice or date of payment, whichever is earlier. Sir, if a invoice issued after the time period as per section number 31, that means we are not issuing invoice within the time period. In such a case, date of provision of service, that means the date when we provided the service, or date of payment, whichever is earlier. So if invoice issued within the time period, date of invoice or date of payment, whichever is earlier. If invoice not issued within the time period, that is after, in that case, date of provision of service or date of payment, whichever is earlier. Okay, now. So now we will discuss how to identify last date of invoice. So first thing, sir, in general case, normally if you are providing services, in that case, from the date of providing the service, from what data? From the date of providing the service, you need to issue invoice within 30 days. That means, can I say from the date of service, 30th day will be the last day? Yes. Okay, now. Sir, in the case of IFB, insurance, financial institutions and banking, the said 35 days place may you need to write how many days? 45 days. So can you say 45 days is the last day? Yes. Next, sir, we are providing the service, but the service is linked to the due date. Suppose example, take postpaid SIM cards, that is linked to a due date. Take internet bills, all they are related to the due date. If that is the case, check whether due date is ascertainable. That means whether we know the due date or due date is not ascertainable. If the due date is ascertainable, then last date of invoice is on or before such due date. That means, can I say due date is the last date to raise the invoice? Yes. If it is not ascertainable, in such case on or before receipt of payment, the date of receipt of payment will be the last date. Sir, and if the service is linked to completion of event, suppose take a immovable property. In the case of immovable property, example building, we are not going to make the payment at one time. The payment will be made on a stepwise basis. Suppose after construction of first floor 20%, second floor 40%. That way we are going to make the payment. So can I say here the payment is linked to completion of event? Yes or no? In such case, the last date of invoice will be on or before completion of such event. So whenever the first floor is getting completed, the company has to raise invoice for that 10 or 20%. So this is the time limit as per section number 31. So take this time limit, check actual date of invoice within the time period or after the time period. If it is within the time period, date of invoice or date of payment, whichever is earlier. After the time period, date of providing the service or date of payment, whichever is earlier. Sir, and one more point. In the case of IFB, insurance, financial institutions and banking, as well as telecom companies, if they are providing service to distinct persons means multiple registrations with the same PAN card, then the last date of invoice will be date of recording in books of accounts or expiry of the quarter in which supply is made, whichever is earlier. So book entry or end of quarter, whichever is earlier. In that time, we need to issue the invoice. So this point we are done. Sir, in the case of RCM, earlier we discussed about the goods, date of receipt of goods, date of making the payment, 31st day from issue of invoice. Now in the case of services. So services mean there is no concept of receipt. There is only concept of payment. So date of making the payment, 61st day from issue of invoice. Earlier it will be 31st day. Now it will be 61st day. Sir, one point where the students are going to make mistake is section number 31, they will apply in the case of RCM also. Remember, last date of invoice, you need to check only in the case of goods, services, FCM. RCM is the most simple thing. Just you need to check goods aithe, receipt of goods, making the payment, 31st day from issue of invoice. That's it. There is no concept of last date. Services case mein, date of making the payment, 61st day from issue of invoice. What is the meaning of date of payment? Book entry or bank entry, whichever is earlier. Same case, if it is not possible to determine the time of supply, then what is the time of supply? Date of recording in books of accounts. Sir, if you are making any import of service from associated enterprise, in that case, the time of supply will be date of payment or date of book entry, whichever is earlier. Next, vouchers concept. At present, vouchers will be treated as neither goods nor services. So there is no need of time of supply in this case. Sir, in the case of LIP, all we remember that late fee interest penalty. What will be the time of supply? Date of receipt of such payment. Whenever we receive all these things, that will be the time of supply. Sir, in the case of any excess payment which is up to rupees 1000, in the case of excess payment of rupees 1000, generally if you remember the services, what will be the time of supply? Date of invoice or date of payment, whichever is earlier. That means if I am receiving any advance, automatically date of payment will be earlier. But the government is saying if you receive the payment is up to 1000 rupees, you can take date of payment or you can take date of invoice as per your wish. Normally, date of payment is earlier, so we are taking date of payment. But government is saying that, Babu, if you receive advance up to 1000 rupees, then it's up to you. You can take whatever you want. You can take either date of payment or you can take either date of invoice as per your wish. There is no concept of whichever is earlier. So I hope you are clear with this one. So this is the chapter with respect to what? Time of supply. Section number 15. Sir, first thing, the section number 15 says that the value shall be the transaction value. The value at which the transaction is happening, the exchange is happening, that value we call it as what? Transaction value. However, government is saying that this transaction value can be accepted only when the buyer and the seller are not related and price is the sole consideration. If these two conditions are satisfied, we will be taking the value as which value? Transaction value. What are the two conditions? The buyer and the seller are not related, plus price is the sole consideration. Sir, if buyer and seller are related or price is not the sole consideration, in such cases transaction value is not accepted. We need to focus on something called as valuation rules, which is applicable for CMA Inter students only. Okay, sir, if at all the value is a transaction value, then the government is saying that there are some additions and there are some deductions. All these additions are given in a section number 15.2. All these deductions are given in section number 15 subsection 3. So what is 15.2? The value of supply includes, sir, what it includes? It includes any taxes, any duties, any cess, any fee charged except the tax that is going to be charged under GST Act. Any taxes, duties, cess, fee charges levied under any law for the time being in force other than GST charged separately by the supplier. So the common point, the question they are giving is municipal taxes. They'll give you 1 lakh as a value, municipal taxes 10,000. Tell me, should I add municipal taxes or not? Obviously, yes, because municipal tax is a tax which is not charged under GST. Any taxes other than GST should be added to the value. If they give you excise duty, that is also should be what? Added to the value. So, except CGST, SGST, IGST, UTGST, GST compensation cess. Apart from these, if you find any taxes in the question, add those taxes to the value. However, remember there is one clarification with respect to the TCS. First thing, tax collected at source. This is TCS as per Income Tax Act. In the case of Income Tax Act, generally TCS provisions are applicable. Let us take one example. TCS is applicable in the case of purchase of the car. So, if any person, I'll give you a brief example. If any person, let us say he purchased a car for rupees 20 lakhs. To the shopkeeper, can I say the recipient, he will pay 20 lakhs? Yes or no? Sir, let us assume this recipient is filing income tax return as per Income Tax Act. You know what? He showed his last year income as 4 lakhs. But today he is purchasing a car worth 20 lakhs. Now tell me whether it is practically possible for a person who is having income of 4 lakhs purchasing a car worth 20 lakhs? No. That means there is a kind of under reporting of income as per Income Tax Act. So Income Tax Act is saying to the seller, whenever you sell a car, give me the details of the recipient. Give me the details of the recipient. Now the seller asks, sir, how can I will give you the details of the recipient? So the government said, if that is the case, you are collecting 20 lakhs value of the car, collect the extra 1%. Example 20,000. That means the recipient now will pay to the seller not 20 lakhs, he will pay 20 lakhs 20,000. So this extra 20,000 is there, no? This extra 20,000 the seller has to deposit to the Income Tax Act by way of TCS. So he is collecting TCS and he is depositing to the government. Government Income Tax Act, can I say they collected 20,000 rupees? Now government will do the cross verification. 1% will be 20,000, 100% means he is purchasing a car worth 20 lakhs. Government will verify with his income tax return. If there is any under reporting, the income tax will send a notice to the person. So now the income tax collected 20,000, no? After collecting 20,000, the income tax will give back the money to the recipient. By filing a return, we need to claim the TCS of 20,000 by way of refund. That means, can I say in this transaction, 20,000 is not revenue to the government. First, the recipient is giving to the seller. So, recipient paid 20,000 to the seller paid 20,000 to the government, and government giving back 20,000 to the recipient. That means, now tell me what is the value of the car? Only 20 lakhs. Because 20,000, even though the recipient paid, again government is giving him. So 20,000 is not an expenditure to the recipient. If it is not an expenditure, can we add 20,000 to the value? No. So that is why TCS, if any given in the question, don't add to the value. TCS is never added to the value. TCS is charged just to know the transaction, not to collect taxes. Government intention to know the transaction. I hope this clarification is clear. Next point, payment to the third parties. So the recipient generally has to make payment to the supplier. But on behalf of the supplier, recipient is making payment to the third parties. If at all recipient is making any payment to the third parties, then that amount should be added to the value as per section number 15 subsection 2. Next, any incidental expenses means along with the main supply any other expenses if you are incurring, such as if you are incurring any packing charges, any commission, any inspection charges, any pre-inspection charges, any certification charges, any testing charges, any weightment charges, all these things are called as what? Incidental expenses. So along with the main supply, if you are incurring any extra cost or any extra expenses, those expenses also should be added to the value. Next, outward freight transit insurance. Sir, here focus on my words. If you remember, we discussed two terms, ex factory, free on road. Sir, what is ex factory? In the case of ex factory, the seller responsibility is up to the factory gate. From the factory gate to the location of the recipient, it is a responsibility of the recipient. This contract is called as ex factory. In the case of free on road, the seller arranging the transport and he is delivering the goods till the recipient location. So in ex factory case, tell me whose responsibility is to take care of the transportation? Recipient. So ignore those transportation freight insurance charges. Since the responsibility is on the buyer, it is not linked to the transaction which is made with the seller. So if the contract is ex factory contract, don't add transportation charges, freight charges, insurance charges. If it is a FOR, what is FOR? The seller is selling the goods. Along with that seller, the seller is offering what? The transportation. So can I say it is a composite supply? Since it is a composite supply, add the transportation charges to the value. In simple terms, ex factory case may we are not adding, FOR case may we are adding, because FOR case it is the responsibility of the seller to deliver goods to the buyer. So that is with respect to freight and transit insurance. Next, sir, any interest late fee penalty, as we discussed earlier, there is something called as LIP, late fee interest penalty. So if at all the seller is collecting any late fee, any interest, any penalty from the buyer, those amounts should be added to the value. However, remember, whenever these things are given in the question, generally they are assumed as inclusive of GST. Assumed as what? Inclusive of GST. So let us assume 100 rupees we received as a late fee at the rate of GST 18%. So if that is the case, we need to treat this 100 as inclusive. That means 100 divided by 100 plus GST into 100. What is 100? This upar wala 100 we call it as late fee. Denominator 100 plus 18. So total becomes 118. We need value, so we are multiplying with 100. So whatever the number you are getting, that number is called as value. If you multiplied with 18, then you are getting the GST amount. So if you multiply with 100, you are getting the value. If you are multiplying with 18, you are getting the GST amount. This provision should be applicable in the case of what? Interest, late fee or penalty, when a late fee is given and the rate of GST is given. If the rate of GST is not given, we cannot do 100 divided by 100 plus 18, because we need to identify the rate of GST. So whenever the rate of GST is given, assume the transaction as what? Inclusive of the taxes. And one more important point, in the case of late fee interest penalty, remember the time of supply provisions. Sir, what is the time of supply provisions? Time of supply provisions in the case of LIP, date of receipt of such extra payment. So whenever you receive the late fee, whenever you receive the interest, whenever you receive the payment, that date will be called as what? The time of supply, not the date of actual supply of the goods. So these are the additions. And the last one, most important one, subsidies are directly linked to the price and excluding subsidies provided by the central government and state government. Sir, first thing, we are talking about subsidies. What is the point they were saying? Subsidies linked to the price. If the subsidy that is not linked to the price, directly ignore. If the subsidy that is not linked to the price, example, they will mention something called as blanket subsidy. Blanket subsidy means a subsidy has been given, however it has no relation with the price. That should not be considered. Here we are focusing on what? A subsidiary which is linked to the price. Okay now, and there are two types of subsidies. Subsidies can be given by CG or SG. Subsidy can be given by any other. Sir, any other, generally in the questions they will mention NGO. NGO is not a government, that is CG or SG. Okay. Sir, let's take a simple example. Value they gave to us is 1000. Subsidy given by CG 100, adjusted in the value. This is the adjustment they gave to us. First thing, remember subsidy can be given by two parties. One is the government, the other one is other than government. If the government is giving you subsidy, no, you can minus, no problem. But if other than government is giving you subsidy, don't reduce. If you already reduced, no, then add back. So in what case we need to add back? If the subsidy is given by the other than government, because that is not allowable deduction. Which is allowable deduction? Subsidy given by the central government. If you see here, there is 1000 rupees as a value. And what is the transaction given to us? Subsidy given by the CG is 100, adjusted in the value. That means they already reduced the 100 rupees. After reducing 100 rupees, the value is 1000. Now tell me, if the subsidy is given by CG, can I reduce or not? I can reduce, and already I reduced. So do I need to make any adjustment? Not required, because already it is 1100. I reduced 100. It becomes how much? 1000 rupees. However, if the question says subsidy given by other than government, subsidy given by other than government adjusted in the value, that means after reducing 100 the value becomes 1000. Sir, but can I reduce 100 rupees? No. Why no? Because the subsidy is given by other than the government, so I should not reduce the 100 rupees, but I reduce 100 rupees, so I need to what? Add back. So the value becomes how much? 1100. So this is generally the subsidy point. So if you are having value, in this value, which is subsidy you can minus? Subsidy given by central government. Which is subsidy you cannot minus? Subsidy given by other than government. If you already minus, if the subsidy is given by central government, no adjustment is required to be made. You already minus, but the subsidy is given by other than government, then you should be added back. So this is the concept of subsidy, and section number 15 subsection 2. Next, section number 15 subsection 3, discount. So discount, in what cases we need to reduce from the value, in what cases we cannot reduce from the value. So two things. Check when discount is given: before the supplier, after the supplier. If a discount is given before the supply, then we can reduce the discount provided the discount has been mentioned in the invoice. Provided the discount has been mentioned in the invoice. And then can I say any discount which is mentioned in the invoice is allowed as deduction. Sir, if the discount is given after the supply, can we mention in invoice? No, it is practically not possible. So if the discount is given after the supply, in that cases there must be two conditions satisfied. What are the two conditions? First condition will be there must be a prior agreement. There must be what? Prior agreement between the buyer and the seller, that in the future if you satisfy any conditions, then I'll give you a discount. This is called as prior agreement. Second condition will be proportionate amount of ITC should be reversed. So the person who is claiming ITC, he need to reverse the proportionate ITC, because when they are giving discount, no, the proportionate amount of ITC should be reversed. When these two conditions are satisfied, then discount will be allowed as deduction when the discount is given before or after. After. So these are the two cases. What are the two cases? Discount given before, discount given after. If the discount is given before, then discount is allowed provided the same should be mentioned in the invoice. If the discount is given after, discount is allowed as deduction provided proportionate amount of ITC should be reversed, and there should be a prior agreement between the buyer and seller about the discount. So this is the concept with respect to the topic called as value of supply. Okay, na? So guys, now we will discuss the revision of a chapter called as input tax credit. So all we know that ITC acts as a heart of GST. So sir, basically, who can claim ITC? Sir, as we know that every registered person under GST can claim ITC? Yes. Sir, on what items the person is eligible to claim ITC? Sir, the registered person is eligible to claim ITC on all inputs. You hear right? The registered person is eligible to claim ITC on all the inputs, provided these inputs must be used in the course or furtherance of business. That means, let us say if at all I am a registered person, I purchased some inputs. Those inputs which I am purchasing, I'll be paying some GST, yes or no? That GST can be claimed as ITC provided whatever the things that I'm purchasing, I need to use the same in the course or furtherance of business. Then on all those inputs, whatever the tax I paid, I can claim the tax as what? ITC. So this is what said in section number 16 subsection 1. Then we have a 16 subsection 2, conditions for taking ITC. So let us assume there is a transaction, there is a seller and there is a buyer. Seller sold some goods to the buyer. Let us say the value is 100 plus 18 rupees GST. Now can I say the buyer is paying a total of 118 rupees? Whatever the amount paid by the buyer, that includes two components, that includes goods component and the tax component. So now tell me, who can claim this 18 rupees as ITC? The seller or the buyer? The person who is paying the tax can claim ITC. That means 18 rupees can be claimed as ITC by the buyer. So can I say, whenever I'm talking about the conditions for taking ITC, I need to think from the seller point of view or buyer point of view. Always these conditions are from buyer or recipient point of view, not from the seller point of view. Sir, what is the first condition? So the first condition is the person who is claiming ITC must have a tax paying document. That means, example, I purchased some goods. There should be some proof that I am purchasing these goods. So example, I need to have something called as tax invoice for the proper documentation. If tax invoice is not available, I need to have something called as debit note. So what is the meaning of debit note? Debit note is a supporting invoices where we are going to increase the tax amount. If not debit note, self invoice. Sir, when self invoice is generated, when the recipient is paying tax on RCM basis, in that situation, the recipient has to generate an invoice on him behalf only. That is called as self invoicing. If not self invoice, if you are importing goods, then you need to have something called as a bill of entry. So these kind of documents, any one document will be acting as a proof. If at all you don't have any of these documents, but they are saying like any paper can be act as a invoices, provided these basic details need to be mentioned. Sir, what are the details? GST number of both supplier and recipient, then value of the goods, description of the goods, tax charged, place of supply in the case of interstate supply. So any of these documents if you are having, then the first condition will be satisfied. What is the first condition? Possession of tax paying document. Second condition, so the person claiming ITC, who is a person claiming ITC? Buyer. So what buyer is doing? Buyer is making a payment to the supplier. Yes or no? Value 100 plus 18. Sir, as we know that from the chapter called as returns, every supplier has to file what? A return called as GSTR1, because as a buyer to claim ITC, I cannot do anything. The return has to be filed by the supplier. So condition number 2 says that the seller has to file GSTR1. As we know that whenever the seller files GSTR1, immediately what happens? The same should be reflected in GSTR 2B of the buyer. When it is going to reflected in 2B, then and only then the buyer can claim the ITC. This is condition number 2. So sir, what is condition number 2? The seller has to file GSTR1. The same must be reflected in buyer GSTR 2B. Third condition, the person claiming ITC must receive the goods or services. Example, I am the recipient. I purchased 100 rupees worth of goods. On these 100 rupees, let us assume I paid 18 rupees as a tax. So to claim 18 rupees as a tax as ITC, what I need to do? I need to receive the goods or I need to receive the services. Without receipt of goods or services, I cannot claim what? ITC, provided there are some exceptions. Sir, what is the meaning of exception? Exception means even though I am not receiving the goods, I still can claim what? ITC. The first exception is, we call it as bill to ship to model. Sir, what is bill to ship to model? I'll tell you. Sir, example, recipient need some goods. He gave an order to the supplier. Okay, now let us say recipient need 100 pieces of some product, but whenever the supplier receives the order, supplier don't have the specified stock. So what supplier did? Supplier gave order to his supplier. Let us say we call him as actual supplier, we call him as third party. So this third party gave order to the actual supplier saying that, Babu, actual supplier, I need 100 pieces of goods, but don't deliver this 100 pieces of goods to my premises, rather deliver them to my recipient. So what actual supplier is doing? He is delivering goods to the recipient, but actual supplier gives invoice to him. Actual supplier gives invoice to the third party. So remember here, now actual supplier is doing two things. What are the two things actual supplier is doing? Actual supplier is giving goods to the recipient, but whereas the actual supplier is giving invoice to the third party. That means, can I say here the amount is paid by the third party to the actual supplier? Yes or no? So that means, let us say 1000 plus 180. 1180 is the amount paid by the third party to the actual supplier. So now third party is paying tax also. For third party, that is a purchase. On the purchase, he is paying tax. Can I say this third party can claim 180 as ITC or not? Yes. But in any given situation, whether the third party will receive the goods, practically not possible, because the goods are already delivered to the recipient. That is why what the act is saying, that in the case of bill to ship to model, the person, this third party is there, no? He can claim ITC whenever the recipient receives the goods. That means if the recipient receives the goods, it is assumed that the third party himself has received the goods. So the third party can claim what? ITC. So this is exception number 1, bill to ship to model. There is one more exception, that is called as goods received in lots or installments. So when the goods are received in lots or installments, the provision is saying that you cannot take proportionate ITC. What is the provision saying? You cannot take proportionate ITC. You can take full ITC only when the last lot or installment is received. So when the goods are received in lots or installments, when you can claim ITC on proportionate basis? No. The ITC can be claimed only when the last lot is received. Then you can claim full ITC. And there is a new clarification inserted. This is exception number 3. Sir, under delivery of goods, there are two contracts. One is called as X contract, or we call it as X factory, and there is one more thing called as FOR, free on road. So these are the two things. Sir, I'll tell you what is X factory mean. Example, I am the seller, you people are the buyer. I said that I don't have any responsibility with respect to the delivery. As a buyer, you have to come to my factory, you need to collect the goods, and you need to handle the courier or transportation. That means my responsibility is up to handing over the goods. That's it. This process is called as X factory. That means, can I say the ownership will be transferred when and only when the goods crosses the factory gate, because I don't have any liability with respect to the transportation. Sir, whether when it comes to FOR, free on road, I am saying that buyer, you please stay at your premises. Let me know like where I need to deliver the goods. It is my responsibility to deliver the goods at your premises. That is called as free on road. So in the case of a free on road, the ownership will be transferred after the delivery, when the goods are handed over to the buyer at their premises. But whereas in the case of X factory, the ownership will be transferred at the time of the giving to the factory gate. So the provision says that in the case of X factory, in the case of what? X factory, since the ownership is going to transfer at the factory gate, so the buyer can claim ITC when he hand over the goods, not at the time of receipt of the buyer premises. Let us say on first, we'll take on 30 April, buyer came to our premises and he purchased 1 lakh worth of goods by paying 18,000 as tax. He collected goods on 30 April. This is on X factory basis. The collected goods reached the premises of the buyer on 5th of May. Now tell me, in which month the buyer can claim ITC? In the month of April or in the month of May? The government is saying that since the contract is X factory contract, so reaching the premises is not relevant. Ownership transfer is only the requirement. So when the ownership has been transferred in the month of April, so in the month of April, the buyer can claim what? ITC. So these are the 3 exceptions to a point called as person claiming ITC must receive the goods. I hope this is clear. Next point, tax leviable on supply actually paid to the government. That means the supplier is collecting tax from the buyer. Whatever the tax collected by the seller from the buyer should be deposited to the government. Sir, how tax will be deposited to the government? By filing a return called as GSTR 3B. So can I say the supplier has to file GSTR 3B? Yes. The provision says that registered person, so there are two parties, supplier and recipient. At the initial thing, we saw second condition. What is the second condition? Supplier has to file his GSTR 1. When supplier files GSTR 1, automatically the same will be reflected in recipient GSTR 2B. Recipient will come to know that whether the supplier has filed return or not. How, sir? Because if the supplier is not going to file his GSTR 1, automatically recipient will not get the ITC. Sir, but in any given case, whether the recipient will come to know whether the supplier filed his 3B or not. The provision says that if the supplier is not going to deposit the tax to the government, the recipient cannot claim ITC. That means supplier has to file his return. But in any given case, whether it is practically possible for the recipient to check whether the supplier has filed a 3B or not, it is not possible. So that is why government gave a time limit. The time limit is if the supplier fails to file GSTR 3B for the corresponding tax period by 30 September following the end of the financial year in which ITC was availed, the recipient must reverse such ITC in their GST 3B on or before 30 November of the year. Failure to reverse attracts interest under section 30, interest under section 50. Sir, what is this point? Let us say financial year 24-25. We'll take the first month. In the month of April, supplier sold some goods to the recipient and the recipient paid 100 plus 18 rupees as tax. For the April month, the return will be filed in the month of May. So in the month of May, supplier filed his GSTR 1. After filing GSTR 1, the same has been reflected in recipient GSTR 2B. So recipient claimed 18 rupees as ITC. Now the provision says this supplier has filed 1, but along with the 1, this supplier has to file 3B. If the supplier is not filing 3B, the ITC claimed by the recipient should be reversed. But the provision says the supplier is having a time limit for filing 3B. What is the time limit? For the financial year 24-25, supplier has to file the return by 30 September of the next financial year. That means for the current financial year, the supplier has to file the maximum time limit for 3B is 30 September of next financial year. If the supplier files his 3B by 30 September of next financial year, there is no problem to the recipient. Recipient already claimed his ITC, so recipient will be happy. However, if the supplier fails to file return by 30 September, an intimation will be given to the recipient saying that the supplier has not filed his 3B. So, whenever receiving the intimation, the recipient has to reverse the ITC claimed. How much? Reverse the ITC claimed. How much? 18 rupees. Sir, at the time of reversal, no interest will be levied because after 30 September, intimation will be given to the recipient and recipient has been reversed. Sir, but government is saying if the recipient is not reversing 18 rupees by 30 November of next financial year, because intimation is given after 30 September. So immediately what he need to do? Immediately he need to reverse. Government says like there is no need to pay any interest. But if you are not going to reverse the same by 30 November, then you need to reverse the 18 rupees plus interest as per section number 50. That is 18% per annum. So reversal along with interest. That means up to 30 November, reversal will not attract any interest. After 30 November, reversal will attract interest as per section number 50 at the rate of what? 18% per annum. Okay, now I hope this is clear. Sir, after making reversal, in future, what if the supplier files his 3B? Then after filing 3B, again the recipient can claim what? The ITC. So in future, if the supplier files 3B, the recipient can again claim what? ITC. So this is the point, taxes supplied will be actually paid to the government. Next thing, the recipient who is claiming ITC, to claim ITC, he also need to file his 3B. So till now we have seen 5 conditions. Number 1, tax paying document. Number 2, supplier has to file GSTR1. The same should be reflected in recipient 2B. Number 3, the person claiming ITC must receive the goods. We have seen 3 exceptions. Number 4 and number 5, supplier has to file his 3B, recipient has to file his 3B. So I hope these points are clear till now. So the next point is restricted ITC cannot be availed. Sir, if you remember, in our regular class, I showed you how the GST portal will looks like. There we have seen a ITC available. There is one box, and there is one more box called as ITC not available. This ITC not available box is nothing but a restricted ITC. Sir, here the recipient ITC has been restricted because recipient has done something fraud. No, recipient has done everything correct. Still, the ITC of the recipient is restricted because something wrong is done by the supplier. Since the supplier is making mistake, the government is punishing the recipient. So what is the first case? The supplier is a new registrant. Suppose example, there is one person who has taken registration. So I purchased, as a recipient, I purchased goods from that supplier. Now government is saying, since he is a new supplier, let us assume for a period of 3 months, whatever the tax paid by me to the supplier will not be claimed as ITC by me. Suppose example, I paid a 10,000 as GST. For 3 months, this 10,000 will be in my ITC not available category. After 3 months, what happens? This amount will be automatically moved to the ITC available category. Sir, why this provision has been introduced? This provision has been introduced to reduce the fake invoices, because people are taking registrations and they are doing all the fraudulent things and all. So to reduce all those things, what government did? The government introduced the restricted ITC provision. This is number 1. Second one, who has defaulted in payment of tax for a prescribed period? So this point we are going to study in our registration chapter. Next, sir, the person filed GSTR1. When filing GSTR1, the supplier showed that his GST liability is 3 lakhs. But when filing GST 3B, he said like his GST liability is only 2 lakhs. That means he is paying more GST, he is paying less GST. He said I am liable to pay 3 lakhs, but now he is paying only 2 lakhs. So GST 3B output tax is less than GSTR1 output tax, then also the recipient cannot claim ITC. This mistake is made by the supplier, but government is punishing the recipient. Next point. So supplier GSTR 2B, he is having ITC of 1 lakh. That means eligible ITC 1 lakh for the supplier. But while filing 3B, the supplier claimed 2 lakhs ITC. Eligible ITC is only 1 lakh, but he is claiming more ITC. In this case also, this is a mistake done by the supplier, but as a recipient, I cannot claim my ITC. Okay, now, so these are the 2 points. Next, who has defaulted in discharging tax liability? Rule 86B. Sir, in the last we are going to discuss something called as Rule 86B, where the person is eligible to claim only 99% of ITC. But if the person claims 100% ITC, then the recipient ITC will be restricted. Next, any other specified conditions. Next, we already discussed the goods received in lots. Next, proviso. Payment for the invoice to be made within 180 days. The supplier sold goods to the recipient. but the recipient has not made any payment to the supplier. But since the time of supply provisions, if you remember the time of supply in the case of goods, we are not focused on the date of payment. Our focus is on what? Date of invoice, date of invoice or last date of invoice, whichever is earlier. That means even though the supplier is not receiving the payment, but supplier is giving GST to the government. So government said, recipient, you are claiming ITC, but you need to make the payment to the supplier within 180 days. If the recipient fails to make the payment within 180 days, then in an immediate return after 180 days, whatever the ITC claimed by the recipient should be reversed. The reversal should be along with interest at the rate of what? 18% per annum as per section number 50. Sir, what if I reversed my ITC? After reversal of ITC, I paid the money to the supplier. If that is the case, again what happens? The recipient can claim what? ITC. Next thing, if depreciation is claimed on tax component as per Income Tax Act, we claim depreciation on tax amount. Let us say the value of the plant and machinery is 1 lakh and GST is 18,000. Total 1 lakh 18,000. Logically, you need to claim depreciation only on 1 lakh, but you claimed depreciation on 1 lakh 18,000. So as per GST, you cannot claim 18,000 as ITC. Next, section number 16, subsection 4. Time limit for availing ITC. So this is the maximum time limit to claim the ITC for the financial year. What is the maximum time limit? 30 November of next financial year or date of filing annual return, whichever is earlier. What is the annual return we are having? GSTR 9. So GSTR 9 filing date or 30 November of next financial year, whichever is earlier, is the maximum time limit. So if you cross this time limit, you cannot claim ITC. Next, this point we will discuss in the chapter called as registration. So this is with respect to what? Section number 16. Then we will discuss a particular section called as 17 subsection 5, which is a blocked credit. Now we will discuss about section 17 subsection 5, which we call it as blocked credit. Sir, first I'll give you a small brief about blocked credit. What is the general meaning of blocked credit? First thing, who is eligible to claim ITC? Any registered person purchasing any inputs and paying taxes. These inputs should be used in the course or furtherance of business. The person can claim what? ITC. This is what said 16 subsection 1. But 17 subsection 5 says, even though it is used in the course or furtherance of business, you still cannot claim what? ITC. That means I am purchasing a product, all the conditions as per 16 has been satisfied. Still, since it is forms part of 17 subsection 5, I cannot claim what? ITC. So on what goods or services ITC is not available? ITC is blocked. Number 1, motor vehicles. Sir, first thing remember, motor vehicles, these are used for transportation. Sir, motor vehicles are used for transportation of two things. One is transportation of goods, the other thing is transportation of passengers. Remember, any motor vehicle which is used to transport goods, you always can claim ITC. ITC is available for transportation of goods. Sir, if a motor vehicle which is used for transportation of passengers, which is used for the purpose of transportation of passengers, then check what is the approved seating capacity. Up to 13 people, which includes driver, or more than 13 people. If the motor vehicle which is used to transport passengers, seating capacity is up to 13, then on this ITC will be blocked. If it is more than 13, ITC will be available. Example, you are using a bus to transport your employees. Since bus is generally having approved seating capacity more than 13, so you can claim ITC on the bus. What if you purchase a car to transport your employees? Since it is up to 13 passengers, ITC is blocked. Sir, even though you are using car for the purpose of business, you cannot claim the ITC. So this is what the provision. And we have exceptions. Sir, what is the meaning of exception? You can claim ITC. What is the first exception? Further taxable supply of such motor vehicle. What is the meaning of this? Sir, my business is to purchase the car and sell the car. In this situation, I can claim ITC because my business is buying and selling of the cars. Second one, my business is to transportation of passengers. Let us say I am providing cab facilities. So my business is providing what? Transportation of passengers. Then I can claim what? ITC. Next one, I am providing a training on driving such motor vehicle. So any driving services provided by me using that car, I still claim what? ITC. So except these three cases, for any other case, if I'm purchasing car and using in the course or furtherance of business, for me the ITC is blocked. Sir, other important points. Sir, if the ITC on car is blocked, automatically insurance, service, repairs and maintenance, we call it as SIR. Service, insurance, repairs and maintenance. If the vehicle is blocked, SIR is also blocked. If the vehicle ITC is eligible, SIR is also eligible. Suppose example, car is a blocked credit. Automatically insurance repairs on car is also blocked. Bus is eligible. Automatically service, insurance, repairs is eligible. Next, so this is something that is important. Where such services received by taxable person. Sir, what is the meaning of such services? Where sir is received by taxable person in the manufacture of such motor vehicle or in supply of general insurance service in respect of such motor vehicle insured by him. 2 points they said. Generally on car, sir is blocked. Okay, da? But remember, I am the manufacturer of the car. I am whom? I am the manufacturer of the car. Now what happens is, I am testing my car. So in this testing process, my car has been damaged. So since I am the manufacturer, I sent my car to my stores for the repairs. The stores department charged me 50,000 rupees for the repairs. Remember, who am I? I am the manufacturer. And on this 50,000, let us assume they charged 9,000 GST. Since I am the manufacturing, even though the car ITC is blocked, still I can claim ITC because I am the manufacturer. This is clear? Yes. Next one, supply of general insurance services in respect of such motor vehicle insured by him. That means if at all the service, insurance, repairs and maintenance, any bill is not given to the owner and they are giving to the insurance company, then the insurance company can claim what? ITC. So example, my car met with an accident. So the repairs, the person who is making service or repairs is not giving bill to me because I have a insurance. So he is giving bill to the insurance company. So the insurance company can claim what? ITC, but I cannot claim what? ITC. So this is with respect to motor vehicles. Then the same concept will apply in the case of vessel and aircraft. Any vessel or aircraft which is purchased for purpose of business, ITC is blocked. Same exceptions, making further supply, buying and selling of vessel aircraft, you can claim ITC. Providing transportation of passenger services, ITC is eligible. Providing training services, ITC is eligible. SIR is also same like above. What we discussed, manufacturer, service, insurance, repairs, the same concept will apply in the case of vessel and aircraft. Then we have a clarification. So this clarification with respect to demo vehicles. Sir, every car showroom, generally they'll be having some demo vehicles for the purpose of test driving. Now the question comes, buying and selling of the cars, ITC is eligible. But what if there is one car which is kept for the demo purpose? That is not for selling purpose, that is for the purpose of demo, providing a experience to the customer. So government is saying that since there is a demo vehicle, it is treated as in the furtherance of business, the person, the showroom can claim the ITC on the demo vehicle. There is no concept of blocking of ITC. They can claim what? ITC. Next, we have something called as list 2. We have something called as list 1. So remember in this way. Chill FM. This is the most easiest code. Chill FM. What is Chill FM? C for catering services. H for healthcare, which includes plastic and cosmetic surgery. I for insurance. L for lease, renting of motor vehicle. The other L for leave travel allowance provided to employee. F for food and beverages. M, membership in a club given to employees. So now all these things, if the company is paying any GST, remember ITC is blocked. In simple terms, in the case of Chill FM, the ITC is always blocked. However, there is exception. Sir, any of these services provided by employer to employee under obligation by the law. Suppose Factories Act saying that every company has to provide food to the employees. So since the employer is providing not on his own will, but this is as per the obligation of the law, the person can claim ITC. That is the first exception. Second exception, so the person is doing this business. Suppose example, my business is to do provide catering. So because of huge rush, what happened is I'm not able to provide service to my clients. So what I did, I took catering services from one person and I provided the same catering services to another person. That means I'm doing a subcontracting work. In this situation also, I can claim ITC. So there are two exceptions here. What are the two exceptions? Provided by employer to employee under statutory obligation. Sir, remember the question always says that it is the obligation of the company, it is the policy of the company. That is not relevant. We need to check as per the statutory, that is as per the law, then ITC is eligible. Second one, the person is in the same line of business, buying those services and giving those services, or the person is doing subcontracting. In those cases, he can claim ITC. In any other case, he cannot claim what? ITC. So we are done with list 1, list 2. Next thing, we'll go with here. Self-construction of immovable property. For example, I wanted to construct a building for my office. Since the building acts as a asset for my business, but government is saying the self-construction of immovable property is blocked. Is what? Blocked. That means I cannot claim ITC. However, if the immovable property is plant and machinery, I can claim ITC. Immovable property, generally ITC is blocked. However, it is a plant and machinery, then I can claim ITC. And remember always, most important thing, this point. When the value of goods or services is not capitalized. Sir, what is the meaning of not capitalized? I'm recording that one as a expenditure in P&L account. If I am recording as an expenditure in P&L account, then I can claim ITC on the self-construction of immovable property. But if I am recording as an asset in the balance sheet, no ITC will be allowed. Next one, when the construction is not on own account, suppose I'm a builder, I am providing construction services to one of my client. My client cannot claim ITC, but as a builder, I can claim ITC because that construction is not for me, that is for my client. So this is with respect to self-construction. Now here comes the works contract. Sir, what is the meaning of works contract? Earlier we discussed about self-construction where we are constructing building on our own. But now what we are doing, we are outsourcing this entire work to someone. I hired one contractor. I said like, Babu contractor, please construct an immovable property. This is the amount I am going to provide. If that would be the case, whatever the amount paid by me to the contractor, that includes GST component also, I cannot claim ITC on that component. Again, the same points will apply here. If it is a plant and machinery or the expenditure is charged to P&L, I can still claim what? ITC. Next one, a composition dealer on his inward supplies, he cannot claim ITC. The logic is very simple. A composition dealer cannot collect tax from the customer. If the person cannot collect tax from the customer, there is no output GST. If there is no output GST, there is no use of input GST. So hence ITC is blocked. Next one, any supply is purchased for the purpose of corporate social responsibility, ITC is blocked. Next, NRTP. Sir, any purchases made by NRTP? See, there are two types of purchases. One is imports, the other thing is domestic purchases. On the imports, whatever the GST he is paying, he can claim ITC. But on the domestic purchases, ITC is blocked. Next one, any goods which are used for personal consumption, ITC is blocked. Goods given by way of a free sample, gift, lost, stolen, ITC is blocked. Next one, return of time expiry goods. Sir, please be attention here. Example, there is a manufacturer. Manufacturer sold one unit to the retailer. Generally, this happens in the case of medical business, pharmaceutical companies. Sir, for ease of thing, he sold one medicine to the retailer. The value of the medicine is 100 plus 18. Recipient paid 118 to the manufacturer, and for all the conditions has been satisfied, so recipient claimed 18 rupees as ITC. Sir, after 3 months, this product still in the stock, but the expiry date has been completed. So what the recipient did is, recipient returned this good to the manufacturer. Recipient returned the good to the manufacturer. Now government saying that in the case of pharmaceutical companies, these kind of returns will be common. So manufacturer has one option. First option is treat this one as a sales returns. Treat this one as sales returns. So to manufacture this one unit, can I say manufacturer would have purchased some goods or services? For this one unit, manufacturer purchased goods worth 50 and paid GST of 9. So manufacturer claimed 9 rupees ITC, no? To sell one product at 100 rupees, he need inputs worth 50 rupees. That means his output GST is 18, his input GST is 9. So now the same product has been returned by the recipient to the manufacturer. So whatever the ITC claimed by the manufacturer, this 9 rupees, the manufacturer has to reverse. This is one option. But since there are many returns, it is not possible for the manufacturer to always check the amount of ITC claimed, the amount of ITC reversal. So government introduced one option. Rather than this reversal, first transaction may this manufacturer sold goods to the recipient. That means manufacturer is the seller and the recipient is the buyer. At the time of return of the said goods, government is saying that treat the transaction as a fresh supply. Sir, what is the meaning of fresh supply? Don't treat as sales returns. Assume now the recipient is a seller, the manufacturer is a buyer. That means the recipient now will issue invoice to the manufacturer. Recipient issued invoice, let us say 50 rupees plus 9. So manufacturer has to pay what? 59 rupees, and manufacturer can claim ITC of 9 rupees. There is no need to reverse any ITC because the sales return will be treated as fresh supply. So when the sales return will be treated as fresh supply, no reversal of ITC is required. I hope this is clear. And the last one, any tax paid in the case of fraud, detention, confiscation, you cannot claim any ITC. So this is what section number 17, subsection 5, the concept of blocked credit. Then we will discuss a section called as section 18, credit in special cases. So now we have section number 18. Sir, what is section number 18? This is called as credit in special cases. So first I'll show you what are the things that were here. Person liable for registration. Second one, we have voluntary registration. Registered person who ceases to pay tax under compulsion scheme, whose exempt supply becomes taxable supply. So first we will discuss these 4 cases. First one, person liable for registration and applied for registration within 30 days. Second one, voluntary registration. Third one, he is a registered person, but he is in the composition scheme. He wanted to switch from the composition to the regular scheme. And again, he is a registered person. Till now, his supplies are exempt supplies. Now, exempt supplies become the taxable supplies. Sir, if you observe, there are 4 scenarios given. But if you do them a grouping, no, the first 2 things are they don't have registration, they are taking the fresh registration. Whereas 3 and 4, they already had the registration, but earlier they are not claiming ITC. From now on, they are claiming the ITC. So we divided the eligible ITC into different categories. Inputs, input services, capital goods. Total there are 3 things. Inputs means goods, capital goods means goods, input services means any kind of services. First thing, all these 4 people are eligible to claim ITC on the inputs. Let us say today we are switching from composition to regular scheme. So yesterday, whatever the stock of inputs I have now, on all those inputs, I am eligible to claim ITC. Input services, whatever the scene, ITC is blocked. I cannot claim ITC. Whereas capital goods, no, first 2 case may you are not eligible because you don't have any registration. 3 and 4, you are eligible because you have a registration. So this is the overall funda. Whereas inputs, all the 4 parties can claim inputs. Whereas input services, no one can claim ITC. Capital goods, first 2 people cannot claim, next 2 people can claim. Now we will see first one. Person liable for registration. The person who has applied for registration within 30 days from the date on which he becomes liable to register, in that cases, as I said, he can claim ITC on all the inputs. So all yes. But input services, no. Capital goods is also no. So, sir, on which date I need to calculate those inputs? On the date immediately preceding the date from which he becomes the liable to pay tax. Next one, voluntary registration. Same case in the case of voluntary also, all inputs you can take ITC, capital goods, input services, no ITC. Which data? As on the date immediately preceding the date of registration. Whereas registered person, he is already registered person, but right now he is switching from composition to the regular scheme. As I said, he can claim ITC on all the inputs, but input services no, capital goods yes. On which data? On the day immediately preceding date from which he become liable to pay tax under regular scheme. Whereas registered person whose exempt supplies become taxable supplies. He is eligible to take ITC on all the inputs and capital goods, not on input services, on the day immediately preceding date from which he becomes liable to pay tax under regular scheme. So, but important, we wrote capital goods. Capital goods, can I say machinery is a capital good? So, machinery already I used in the ineligible period and I'm using in the eligible period. So whether full ITC will be given? No, only proportionate ITC will be given. How the proportionate ITC will be calculated? ITC on capital goods will be reduced by 5% per quarter or part of the year from the date of the invoice. From the date of invoice till the date of switching, I need to calculate the number of quarters. Quarter may be part quarter or full quarter, will be treated as full quarter. Remember, in the GST, the quarters are fixed. Jan, Feb, March, one quarter. April, May, June, one quarter. July, August, September, one quarter. October, November, December, another quarter. So, since the quarters are fixed, we need to calculate number of quarters. After calculating number of quarters, reduce 5% per quarter, you will get the final ITC. That will be the eligible ITC. Just a minute, Amma. Okay, now. So that way we need to calculate the number of quarters. For every quarter, reduce 5%. So whereas remember, in all these four cases, only ITC will be available to the goods that were purchased within 1 year from the date of claiming. So today I shifted from existing scheme, that is composition, to regular scheme example. So I am calculating the eligible ITC yesterday, no? So remember, whatever the inputs or capital goods I am taking ITC, these inputs or capital goods I need to purchase within 1 year. If it is more than 1 year, no, I cannot claim ITC on those goods. Only which are purchased within 1 year, only on those you can claim what? ITC. So this is from opting from composition to regular, exempted to taxable, new registration or voluntary registration. Then we have a switching to composition or exit from tax paying status. These people are now going to what? Compositions. Earlier we discussed what? These people are coming out from composition. Now these people are going to what? Composition. Or these people services becomes or goods becomes what? Exempt supplies. In that cases, what you need to reverse the ITC. Sir, how ITC will be reversed? Check if invoice is available, ITC will be reversed as per the invoice amount. Sir, what if invoice is not available? Then refer the current market prices. Based on the current market prices, reverse the ITC, provided it must be certified by practicing chartered accountant or the cost accountant. Whereas capital goods, see here, capital goods, you need to calculate the remaining useful life. How we need to calculate? It should be calculated in months. Reversed on a pro rata basis, taking the useful life as 5 years. Example, I used 5.3 months, 5 months, 15 days. Then, what is the remaining useful life? Total 60 months, 60 minus, let us say 5.5. It will be becoming 54.5, round off, that is 55. So these are 55. Let us say I claimed ITC of 1 lakh. 1 lakh into 55 divided by 60. This much amount of ITC I need to reverse. So this is how the reversal will work. Next one. Supply of capital goods or plant and machinery on which ITC has been claimed. Sir, here there is no concept of switching, but what happened is I purchased one machinery. Now what I did is I sold the machinery. In that case, the government is saying calculate two things here. Higher of ITC taken on such goods reduced by 5% per quarter or part of the quarter. Where with the earlier calculation, calculate in that way. You will getting some amount, or calculate a tax on the sale value, the amount that you are selling. Take whichever is higher, reverse that amount. Sir, in the case of refractory bricks, molds, dies, jigs, you can take the transaction value. There is no need to calculate both the things, whichever is higher. Next, Transfer of ITC in the case of a change in constitution. For example, in the case of demerger, where company A will be splitting into two companies, A and B. In that case, B, let us say B is a new company. In that case, AITC can be claimed by B, no? On what basis? On the basis of a proportionate amount of assets has been transferred. Let us say A transferred 40% assets to B, then B is eligible to claim 40% of total ITC. Next. So this is most important thing where we can expect a theory question. Rule 86B. Sir, what is Rule 86B? Rule 86B says that when you are filing your 3B, how you will file? You will calculate output GST minus you will calculate a ITC. Generally, let us say if output GST is 1 lakh and I have a 5 lakhs ITC in my electronic credit ledger, generally I can reduce 1 lakh, so net tax payable will be 0. But government saying you cannot claim 100% ITC. For you, ITC will be restricted to 99%, that is 99,000 only. That means you need to pay 1,000 in the cash. This is the rule 86B. Sir, whether this is applicable to all the people? No, sir, this is not applicable to all the people. This is applicable to the registered persons whose taxable supplies, so this taxable supplies excludes exempt and zero rated in a month exceeds 50 lakhs. Sir, it is always calculated month wise. This month my sales exceeds 50 lakhs excluding exempt and zero rated. Then this month return I will be filing next month. No, for that month only 99% provision will be applicable. Example, in next month my sales is only, let us say, 20 lakhs, then for that month 86B will not apply. So 86B will apply only in the case of monthly check. The value should exceed what? 50 lakhs. So what is the restriction? He can claim only 99% ITC. Balance 1% he need to pay in the form of cash ledger. Sir, exceptions to whom Rule 86B will not apply. Remember these exceptions. Income tax payment. Sir, any person, that is individual or the entity, who paid income tax more than 1 lakh in the last 2 financial years, last financial year and before financial year, every financial year, if he is paying income tax rupees more than 1 lakh, then for them Rule 86B will not apply. That means they can claim 100% about electronic credit ledger. Next, refund of ITC. Sir, if the person is having a refund more than 1 lakh, generally when refund will be given in the case of zero rated. Since he is already having refund and the value of refund is what? More than 1 lakh, for them Rule 86B will not apply. Next, cash payment of GST. Sir, example, we are calculating for the month of November. Check from April to November. Cumulative thing. If in the cumulative case already he paid in the form of cash 1% or more, then in the month of November, for him Rule 86B provisions will not apply. Next step, to specify registered persons. Generally in the case of government departments, PSUs, local authorities, statutory bodies, the Rule 86B provisions will not apply. So this is with respect to what? Rule 86B and a chapter called as what? ITC. Okay, Nama? Thank you. Thank you for watching. So hello everyone. Now we are going to revise a chapter called as place of subclaim. So before revising this specific chapter, first we need to learn, sir, why we need to learn this chapter. Sir, the main aim to learn this chapter is to determine the supply into intrastate supply and interstate supply. Sir, what is the difference between intrastate and interstate? Sir, if the location of the supplier and the place of supply are same, we call it as intra. Whereas if these two things are different, then we call it as what? Inter. Sir, if it is intra, we are going to charge CGST and SGST. If it is a inter, we are going to charge IGST. So to charge the type of GST, we need to learn the location of supplier and we need to learn the place of supply. But anyhow, location of the supplier, we already know the place where the supplier has been located or the place where the supplier has obtained the registration. But the problem is to identify the place of supply. So to identify the place of supply, we will be having a separate chapter called as place of supply. So what are the sections that were covered here? Number 1, we have section number 10 and we have section number 12 of which act? Remember, generally by default all the sections are forms part of CGST Act, but whereas place of supply, here we are focusing on IGST Act. So whenever I am saying section number 10 or section number 12, we are talking about which act? We are talking about the IGST Act. So section number 10 talks about the place of supply in the case of goods, whereas section number 12 talks about the place of supply in the case of services. Okay, now. So first, section number 10, place of supply of goods other than the goods which are imported or exported from India. So we are talking from the domestic goods, not the goods which are imported or exported. So section number 10(1)(a). Sir, what is section number 10(1)(a)? Section number 10(1)(a) talks about the supply involves movement of the goods. Sir, what is the meaning of supply involves movement of the goods? We already know in the chapter time of supply. When there is a movement, that movement can be created by the supplier, the movement can be created by the recipient, the movement can be created by the transporter. Whoever creating a movement, if there is a movement, 10(1)(a) will apply. So you tell me, in the case of 10(1)(a), where the supply involves movement of the goods, what is the place of consumption? Because generally place of consumption will be the place of supply. So the place of supply is the location where the movement terminates for delivery. Where the movements what? Terminates. Sir, what is the meaning of movement terminates for delivery? Where the movement ends. So generally you tell me where the movement will end. The movement will end at the location of the recipient. So that is a place of supply. So next one, we have a specific section called as 10(1)(c). 10(1)(a) talks about supply involves movement. 10(1)(c) talks about supply don't involve movement. So what is the meaning of don't involve movement? Don't involve movement means before the transaction and after the transaction, the location of the goods will remain same. If that is the case, what is the place of supply? So the place of supply will be the location of the goods at the time of delivery to the recipient. So whenever as a supplier we are handovering the goods to the recipient, that place will be called as what? Place of supply. So A talks about movement, C talks about no movement. Sir, whereas there is one more section called as 10(1)(ca). See, what is the point they were talking about? Supply made to a person other than registered persons. See, here they are specifically talking about supply made to registered person other than registered person. Other than registered person, that means here our focus is on what? Unregistered person. Sir, if a 10(1)(ca) is talking about unregistered person, then automatically 10(1)(a) and 10(1)(c) is talking about which persons? They are talking about registered persons. So if any transaction is made to a unregistered person, if there is a movement or if there is no movement, always remember 10(1)(ca) will apply. So 10(1)(a) and 10(1)(c) applies only when the transaction is made to a registered person. If the transaction is made to a unregistered person, always CA will apply. So what is the provision here? Check address of the recipient is available. Check what? Address of the recipient is available. Sir, if the address of the recipient is available, then location of the recipient is the place of supply. Sir, what if the location of the recipient is not available? If the location of recipient is not available, then it is the supplier's location. Generally what happens is, there is one mobile store in Hyderabad example. One person came from, let us assume, he came from Bihar. Now in Hyderabad, he wanted to purchase the phone. In this case, you tell me this is a transaction made to a registered person or this is a transaction made to an unregistered person. Unregistered person. So in such situations, to determine place of supply, check whether you have the recipient location. Location means the state name is enough. If we know that he came from Bihar, then location of the recipient will be the place of supply. If we don't know the recipient location, then where the supplier is located, that is a place of supply. Where the supplier is located, he is located in Hyderabad. So Hyderabad will be called as what? Place of supply. So remember always there is one important question given in RTP where the question says that the billing address and delivery address of the recipient are different. We have the address of the recipient, but recipient is having two different addresses. One is called as billing address, the other thing is called as delivery address. In such situation, you tell me where the consumption is happening. The consumption is happening in the case of billing address, in the case of delivery address. In the case of delivery address, so what is the place of supply? Delivery address. So this is about 10.1 CA. Then we have a 10.1 D. Sir, what is 10.1 D? Goods involves assembly or installation. That means generally the supplier will come to our premises, will come to our place and he will install the product. So any goods which involves assembly or installation, you tell me where the consumption is happening, the place where the assembly or installation takes place, that is the place of supply. Next, goods supplied on board a conveyance which includes a vessel, aircraft, train, motor vehicle. For example, one person is traveling from Hyderabad to Karnataka. So during the train journey, let us say he is consuming some goods. What is the place of supply in such case? Sir, in such case, the place of supply will be the location where goods taken on board. I'll tell you one example. So there is one train, it is traveling from the starting point. Let us assume the starting point is Andhra Pradesh. Okay, now the passenger on boarded the train in Telangana. On boarded the train in Telangana. The seller who is supplying goods on boarded on train in Karnataka. So passenger on boarded in Telangana. The supplier on boarded in Karnataka by taking the goods. And in Maharashtra, this passenger consumed goods. For the consumption of the goods generally happen in the state of Maharashtra, what will be the place of supply? Sir, in such situation, the place of supply will be where the goods taken on board. You tell me where the goods taken on board. Sir, that is where the supplier on boarded the train. That is what? That is the state of Karnataka. So we call as Karnataka the place of supply, not Telangana, not Maharashtra. So wherever the goods that are taken on board, that will be the place of supply. Next, most important section, 10.1b. So this 10.1b is called as bill to ship to model. Sir, what is bill to ship to model? Sir, example, Mr. X gave an order to Y to deliver 100 air conditioners. In such situation, tell me who is X. Can I call X as the recipient? Yes. Whereas Y will be the supplier. Sir, but suddenly Y ran out of stock. So Y ordered goods from A with an instructions that Y need 100 air conditioners, but A has to deliver directly goods to X. Okay, now logically the A will give invoice to Y, but A will deliver goods to X. Now remember, I'm giving the names here. X is there, no? X, we call him as the recipient. Who is X? Recipient. A is there, no? A is called as actual supplier. A is called as what? Actual supplier. Whereas we have Y, the person who is giving the instructions. Y, we call Y as third party. We call Y as what? Third party. So who is the recipient? X. X gave order to Y. So we call Y as third party. Y ordered goods from A. A delivering goods to X. A is giving invoice to Y. So when A deliver goods to X, A is called as actual supplier. Y is called as third person. Now see here. First, A will give invoice to Y. There is one transaction. Second, A will deliver goods to X. This is done. After receiving the invoice from A, what Y will do? Y will issue one more invoice to X. This is transaction number 2. So in this given situation, there are two transactions. One transaction is between A and Y. The second transaction is between Y and X. So remember, the transaction between Y and X. Since there is a movement, if there is a movement, what happens? 10(1)(a) will apply. 10(1)(a) will apply. The transaction between Y and A, between whom? Y and A, 10(1)(b) will apply. This is called as bill to ship to model. As per 10(1)(b), the place of supply will be location of third party. The place of supply will be what? Location of the third party. That means whenever there is a bill to ship to model, we have one place of supply, we have two place of supply. Two place of supply. One is between Y and A. Second one is between Y and X. Y and X, section number 10(1)(a). Y and A, section number what? 10(1)(b). As per 10(1)(b), what is the place of supply? Location of the third party. That is, location of Y will be the place of supply. As per 10(1)(a), what will be the place of supply? Place where the movement terminates for delivery. Where the movement is terminating for delivery? Location of X. So X is the place of supply. So this is a supply involves goods. So we have 10(1)(a), 10(1)(c), 10(1)(ca), 10(1)(d), 10(1)(e) and 10(1)(b). 10(1)(b) is a special case. That model we will be calling as what? Bill to ship to model. Okay, now. So now we will be focusing something called as section number 12, where our focus is on what? Services. Goods only those 6 points, whereas services we have many points here. So remembering services is one of the most important criteria. So what I will do is, I'll give you a small story. Remember the story, so that what happens is you can interlink all the points. Okay, now. So section number 12, sir, basically what happens is, let us take one example. There is one person called as Mr. Arya. So this guy, Mr. Arya, let us assume he is from an area called as SR Nagar in Hyderabad. This person is staying in SR Nagar in Hyderabad. He purchased an immovable property, a newly housed property in a gated community which is located in an area called as Miapur, that is also in Hyderabad. So this is the first thing. So Arya, who is from SR Nagar, has purchased immovable property in Miapur. So that is why section number 12 subsection 3 talks about services related to immovable property. So after purchasing immovable property, what happens is, let us assume today he purchased immovable property. Tomorrow or day after tomorrow, there is a housewarming ceremony that is going to happen. So if the housewarming ceremony that is going to happen, whether he will go directly, or since many people are coming, what he will do? He will go for a basic personal grooming services. So whereas 12 subsection 4 talks about what? Grooming services, where we are talking about a performance basis services. 2 points. Then what happens is, after completion of the this housewarming ceremony, there is one president for the gated community. So that particular president came to the Arya and he said that, Babu, you are staying in a residential property. This gated community will be having some rules and regulations. You need to follow all the applicable rules and regulations. We call it as training and performance appraisal services as per our example. After giving all these stuff and all, the president said that evening an event is going to happen where the all community members are going to present in the event. So the community, the president is going to organize the event, whereas all the people, all the apartment owners or the members, they need to take a admission to the event. So that is why 12 subsection 6 talks about admission to the event. 12 subsection 7 talks about organization of an event. So where the president is coming, president is giving the training and he said he is going to organize an event. So the member has to take the admission. That is why we wrote a first admission, then we wrote what? Organizing the event. So the event has been completed. When the event has been completed, now what happens is the housewarming ceremony is also completed. He need to transfer all the items from old house to the new house. So he need what? He need a transportation services. That is why 12 subsection 8 talks about transportation services. After transporting all the goods, let us assume his family members are located in some other place. So they need to travel from that place to here. So what happens? Transportation of the passengers. Transportation of what? Passengers. Let us assume Arya booked a flight for them. So transportation of passengers, which journey? The flight journey. So during the flight, what happens? They took some services during the journey. So that is why we are calling services supplied on board a conveyance. When the relatives or when the family members came to the newly housed property, they saw their mobile phone and they found that there is no proper network. So what is the situation here? Telecommunication services. Okay, now so when Arya tried to make a recharge, he found that his bank account is having some problem. So that is why we call it as a 12 subsection 12, banking, financial institutions and stockbroking services. Sir, after this what happens is, this entire story is a story that is prepared by the government with respect to the insurance. People are focusing more on purchasing house property, but the government is saying focus more on insurance. So this is an advertisement campaign run by the government with respect to promoting insurance. These are the subsections. If you remember the entire story, first we spoke about this person purchased immovable property. Okay, now first point is immovable property. Then we have what? Performance based services, the grooming services. Then the president gave the training, number 3. Then what the president said, he is going to organize events, so he asked members to take the admission. So admission to an event, organizing an event. Then what happens? From the old house property to the new house property, they need to shift the entire luggage, transportation of the goods. His relatives or family members coming from some other place, transportation of passengers. During the journey, some services they provided, services supplied on board a conveyance. After coming, they saw their phone, there is no network, telecommunication services. Then what Arya did? Arya tried to recharge, but there is some problem with bank account. So banking services, all these things are what? All these things are campaign run by the government with respect to insurance. So insurance and banking, sorry, insurance and advertisement run by the government. These are the specific services. Suppose any services which are not covered here, then there is a residual section called as 12 subsection 2. So 12 subsection 2 will apply only when any transaction does not fall under 12.3 to 12.14. So that is why I am saying this is a residual section. So what is this residual section? If any service that is provided to a registered person, then the place of supply will be location of the registered person. If any service provided to unregistered person, then the place of supply will be location of the recipient. Simple things. Residual section talks about provided to registered person, location of the registered person. Provided to unregistered person, location of the recipient. Sir, what if the recipient address is not available? If the recipient address is not available, then the location of the supplier. This is a residual clause. Now we will discuss one by one section. First section, 12 subsection 3, that is about immovable property. Sir, any services which is directly linked to the immovable property or immovable property used by way of accommodation, or immovable property accommodation in the houseboat, or which is used for organizing an event, or any supporting services. So in simple terms, anything which is related to the immovable property, the place of supply will be the place where the immovable property is located. If the person is staying in the houseboat, in that case the place of supply will be location where the houseboat is located. So now there is one important point. When the immovable property, vessel or boat, if it is located in more than one state, normally if it is in one state, location of the immovable property is the place of supply. But the question comes, what if the immovable property is located in multiple states? In that cases, first try to check whether there is a contract or not. Sir, if there is a contract, you need to separate the value as per the contract. If there is no contract, then we need to follow something called as rule number 4. Sir, what is rule number 4? The property is located in 2 or more states. Let us assume there is one immovable property. Let us assume this is a immovable property. Total of 100 acres the area is. Let us say 70 acres located in Telangana, 30 acres located in Andhra Pradesh. Let us assume the value of the service provided in this immovable property is 1 lakh. Now what happens is 1 lakh to be segregated into 7:3 ratio. 70% of the GST goes to the Telangana state and 30% of the GST will go to the Andhra Pradesh state because of the place of supply provisions. So whenever the immovable property which is located in 2 or more states, then separate the value based on the proportion of the area. Sir, what if the stay which is provided in multiple states? Let us assume I book a package where the package they were saying that total of 7 days package where 3 days of the stay will be provided in Karnataka, 4 days of the stay that is provided in Kerala. So total of 7 days package, but out of 7 days they were saying that 3 days of the stay will be provided in Karnataka and 4 days will be provided in Kerala. Now tell me what is the ratio we need to divide. The entire value should be separated into the ratio 3:4. 3 part go to the Karnataka, 4 part go to the Kerala. Sir, what if the accommodation provided in the boat or vessel and the boat that is traveling in multiple states? If that is the case, if the boat or vessel is traveling multiple states, then separate the value based on the time spent by boat in each state. So basically what happens is, for the vessel there is a person called as captain. This captain will record the time and he will provide the data. So this is with respect to the immovable property. So the next thing is grooming services. We call it as a performance based services. Sir, if you remember here, total there are 5 points are covered: restaurant and catering, grooming, fitness, beauty treatment, health services, which includes plastic and cosmetic surgery. Let us remember these 5 points in this way. Let us assume morning or afternoon for breakfast or dinner, he went to a restaurant. He ordered some food in the restaurant. After completing the order, when he went for his hand wash, in the mirror, he saw that his beard is little bit more. So he thought of going towards salon. That is called as what? Grooming. After completion of the grooming services, every day his habit is to go for the gym. So what is that we call as fitness services? During the workout, what happens is one particular dumbbell slips from his hand and damaged his leg. We call it as what? Healthcare services. But this healthcare services includes plastic surgery and cosmetic surgery. And when it comes to grooming, it includes what? Beauty treatment services. Only these five services are covered. Any performance based services other than these five will form parts of residual clause 12 subsection 2. Sir, what are the points which are not going to cover here? The points which are not going to cover here is example plumber, electrician. They are also performance based services, but those are not covered here. If they are not covered here, they are going to cover under 12 subsection 2. So with respect to these 5 points, what is the place of supply? Where the services are actually performed. The place where we are providing those services will be the place of supply. Next, training services. Sir, in this case, check to whom you are providing the service. You are providing to registered person or you are providing to unregistered person. If you are providing training services to registered person, remember always when the services are provided to registered person and it is specifically mentioned, the location of the registered person is always the place of supply. Sir, what if it is provided to unregistered person? Which services we are providing? Training services. In such case, place of supply will be location where those services are performed. Admission to an event. Sir, in the case of admission to an event, the place of supply will be where the event is located. Organizing an event. Here we are conducting the event. So check the services provided to a registered person or the services provided to unregistered person. As I said to you, if it is provided to registered person, always location of the registered person. If it is provided to unregistered person, location where the event is held is the place of supply. Sir, we provided services to unregistered persons and the event held in more than one state. If that is the case, what happens? Check like earlier whether there is contract or not. If there is a contract, go as per the contract. If not, separate the value as per a gap, as per generally accepted accounting principles. Basically, what happens is in the examination, they will give you the ratio. So, separate the value based on the ratio. Transport of goods, including water, mail or courier. Here also check provide to whom? Provide to registered person or provide to unregistered person. Sir, if they are provide to registered person, as already said to you, location of the registered person. If they are provide to unregistered person, location where the goods handed over for transportation. That means I am going to the courier agency and giving parcel to the courier agency. So the place where I handed over for transportation, that will be the place of supply. Sir, what about passenger transportation services? Here also we have RP and here also we have URP. Sir, if the passenger transportation services provide to registered person, as usual location of the registered person. But if they provide to unregistered person, if you remember the goods, goods may we said handed over. Sir, but can we hand over the passengers? No. That is why we wrote a location where the passenger embark for continuous journey. The place where he embarks the train or the flight or the bus, whatever it is, the place, I mean, embarkation means the starting point kind of thing, you can take in that way. So, sir, what if we booked a round trip? A round trip means, example, I am traveling from Hyderabad to Pune and I am coming back from Pune to Hyderabad. This is called as a round trip, where the single consideration will be charged. In that case, the government is saying that, Babu, treat the return journey as a separate journey. Example, Hyderabad to Pune. What is a place of embarkation? Hyderabad. So Hyderabad is a place of supply. And Pune to what? Hyderabad, that will be treated as separate journey. Pune is a place of embarkation. That is a place of supply. 12 subsection 10, during the journey, if any services that were supplied, if you remember the goods, what we said, the place where the goods taken on board. But sir, whether it is possible to take the services on board? No, that is why we wrote a first scheduled point of departure of the conveyance. The first place where the conveyance is starting, that is the place of supply. Next, telecommunication services. In the telecommunication services, check how the service has been provided. Sir, if the services are provided by way of wire, suppose you have a dish, antenna, what we can say, internet, all these cases, in all these cases, we need to check where the particular wire has been installed. If you remember, Wi-Fi internet case mate, they will come to our premises and they will install the router at our home. That is the place of installation. That is called as place of supply. In the case of network, we are having two things. One is called as prepaid, one is called as postpaid. In the case of postpaid, what happens? First, we need to take the service. After the month they will give us the bill, we need to make the payment. So in the postpaid, what happens is the supplier will be already having our details. So in the case of postpaid, the billing address of the recipient will be the place of supply. But in the case of prepaid, what happens? First we need to make a recharge, then we need to use. So in that case, check how the services have been provided through agent or any other person. If they are provided through agent, address of the agent will be the place of supply. If they are provided through any other person, the place where the payment has been received is the place of supply. Sir, if we made any recharge through electronic mode or through internet banking, example phone pay and all, in that case a location of the recipient in the books of the supplier will be the place of supply. So in any given case, check any other cases. Check whether the recipient address is available. If the recipient address is available, location of the recipient. If the recipient address is not available, location of the supplier. Next, in the case of banking services, financial institutions and stockbroking, the place of supply will be the location of the recipient. If the recipient location is not available, location of the supplier. Next, 12 subsection 13, insurance services. Check to whom the insurance services have been provided. To registered person, to unregistered person. If they are provided to registered person, location of the registered person. If they are provided to unregistered person, location of the recipient. Sir, remember till all these cases where we found a separate transactions between registered person and unregistered person, top training services, then what we discussed, organizing an event, then transportation of goods, transportation of passengers and insurance. These five special cases may we have a specific thing, whether they are provided to registered person, whether they are provided to unregistered person. If the same provided to registered person, location of the registered person. Any advertisement services, the place where the advertisement is played or broadcasted. If there is multiple states, then a value shall be divided based on the contract. However, if there is no contract, specific rules will apply. But at CA Inter or CMA Inter, these specific rules with respect to advertisements are not applicable. And remember, if you are a student who is preparing only for CMA, then for you all these sections will apply, but whatever the rules that we discussed, the above rules as per the gap, the immovable property rule number 4, all those rules will not apply to you. All those rules will be applicable only to the CA Inter students. Okay, now apart from this, there is one more section that is called as a section number 14. Section number 13, sorry. This specific section number 13 will be applicable only to the CMA students. That will be similar to the section number 12. You please have a single reading of it. But if you are writing only CA, for you these are the only two sections that is applicable. So this is the chapter place of supply. So while preparing this specific chapter, I suggest you keep something called as the destination or the consumption point. Majority of the cases where the place of supply will be the place of consumption, because what happens is the earlier taxes are origin based taxes. The supplier will get the tax revenue, government. Whereas when it comes to GST is a destination based tax. So the state where the consumption is happening, the consumption state will get the revenue. So that is why if you refer the place of supply provisions, maximum place of supply provisions are designed in a way that the place where the consumption is happening, that is a place of supply. So in that case, remember in your mind, the place of consumption will be the place of supply, but you can remember in the story method so that you can easily write all the applicable sections. Okay, now done. Thank you.